go full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global news 24 hours a day on it.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
What I want to make sure is as we reopen, we get it right. I'm concerned about a second surge, and I don't think that our economy necessarily can handle a second surge and a complete shutdown.
The Mayor of Boston, Marty Walsh, on this programme, weighing in on a go-slow approach for the city of Boston. Nothing slow about the approach to this market. A really fast, quick repricing of the cyclical areas over the last couple of days. As we count you down to the opening bell in New York, let me run you through the price action. Positive 7 points on the S&P 500. We advance around about 0.2% after some big gains for the areas of this equity market that have been left well behind over the last couple of days. They pick up in rapid fashion. 30.41 is where we are on the S&P 500. In the bond market, Treasury yields basically unchanged on 10. 0.68% is your yield. And in foreign exchange, no big price moves on the big currency pairs. Dollar yen and euro dollar relatively unchanged through much of this morning. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. This is Bloomberg Surveillance, live on Bloomberg TV and on Bloomberg Radio. And the focus, Tom, especially over the last couple of weeks for this market, reopening. How quickly can we reopen and how fast can we normalise? I believe we have some problems with Tom Keene's connection, so I can bring in our next guest. I'm pleased to say that New York's Lieutenant Governor Kathy Hochul joins us now. Kathy, fantastic to catch up with you as we always do every other week, and I'm pleased to say you're with us this morning as well. Can you talk to us about the process of reopening in various parts of New York and what you're learning so far?
Yes, and thank you for having me back on. And in fact, we talk every 2 weeks. So that's a lifetime when you're battling a pandemic. So we are in a far better place this 2-week period than we had then. And during that time, we were able to open actually 9 out of the 10 regions of the state, from Long Island yesterday all the way up to the North Country and far out west to Buffalo. And what we've seen is that there's an optimism, a sense of confidence that's starting to come back, even if most people truly aren't affected by phase 1, because that's manufacturing, it's construction work, very limited retail, but people are very excited about phase 2, which is about to start in some of our regions literally in a matter of days. And so people downstate, New York City and elsewhere who are watching should see that the numbers did not spike up, and that's what we've been monitoring so closely to make sure that we didn't, inadvertently, create a hot spot or a place where we couldn't handle an outbreak or hospitalization would be affected. We've been closely watching the numbers. The metrics drive all of our decision making, and we have now seen that we can manage this first phase of reopening, which allows us to speak about a broader opening in phase 2, which would be all retail, getting back to a lot of our financial services and offices. So we are getting there, and it's really happy to report that this could have been July or August if you talked about this. So I think we're in a good place.
Lieutenant Governor, we're all hoping that the reopening happens quickly and effectively. In the meantime, the budget deficits are growing. Mayor Bill de Blasio coming out yesterday and saying that New York City faces a budget deficit of $9 billion. Governor Cuomo has come out and pled with the federal government, saying that the U.S. needs to support its states, in particular New York. How close are we to having essential services cut off, whether it's sanitation, whether it's police, due to these budget deficits?
Those are exactly the consequences that we're trying to avoid, which is why the governor has been beating this drum for weeks now and literally got on a plane and went to Washington to sit and talk to the president about how there can be no national recovery if the state and local governments are not funded. And we cannot do this on our own. This has been a national crisis, a federal disaster, and the states have taken on the chin. They have had to spend an extraordinary amount of money battling this, and also the loss of revenue is unprecedented. So we're in a tough spot right now, and the last thing we want to have to do is to cut the people who've been there for us. So the federal government has to give us a lifeline.
Lieutenant Governor, not that I've ever been there, but I'm sure Jonathan Farrell has. The Soccer Republic at McHale's. It's on 51st Street in Manhattan here, and it's an example of the streets and the stores shut down in Manhattan. We're going to get a 20% plus unemployment rate June 5th. We have claims coming up at 8:30 after this good conversation. What is the urgency to get stores and shops open under sound and sensible rules?
Well, you actually hit on the balance you're trying to strike right there. We can open everything today and put the public health at risk, and you thought 100,000 deaths was high. Well, it can double that. That's not the approach we're going to take. We're going to do it in a smart way, working with the businesses. The state of New York just announced a small business loan program to help the smaller guys who are not supported and helped as they should have been during the first stimulus bills that came out a couple weeks ago by the federal government. We are having to pick up that, but also making sure that when we do open, they do it safely, because no small business wants to be the site of an outbreak, and it'll ruin their reputation and all their life's work going down the drain. I helped start small family businesses. This is what I did before I got into politics. And I know that people put their dreams into them, and it also creates an identity for a region. I mean, New York City is known by its retail, its shops, its restaurants. And this is what defines our neighborhoods and makes us so great. We're not going to let them slide by and not come back without a fight. And it's been tough, but we had to make these decisions to make sure that New Yorkers literally stay alive. And we are coming out of that, and we are very conscious, and I'm focused on the economic recovery of our state as much as the governor is. And we're not going to overlook those neighborhoods, and we're going to be asking people to come back out and support them. But do it smart. Continue to wear your mask, socially distance. All these shops are going to have taken extraordinary measures to make sure they're safe, so people have the confidence and the faith that when they walk in there, they won't walk out with the virus.
Lieutenant Governor, before we let you go, I think a lot of people would like to know how high the bar is for a second lockdown as many of these economies reopen. Quite clearly over the last several months, a lot of money has been invested in building out healthcare capacity. Do you think the bar is higher now for that reason?
Yes, I do. I think we are prepared. Last time we were absolutely caught off guard. We had no early warning from the federal government that would have helped us prepare. The scale of it was absolutely downplayed from the very beginning, and the state of New York has had to pick up the pieces as the site where literally millions of Europeans came and unfortunately brought the virus with them during this vulnerable time. So we now know what it takes to manage a pandemic. I don't foresee that we'd have to take the drastic measures that we had to undergo before if people continue doing what we asked them to do literally through the summer. I mean, I know it's tough, but keep wearing the masks when you're within 6 feet of people. We now know how to stop the spread. Our hospital capacity, we know how to ramp it up quickly. We don't want to face this again in the second wave, but we're realistic. But I can't foresee a situation where we'd have the complete and utter lockdown that we had to experience, because now we're ready.
Well, let's hope we don't experience that again. New York's Lieutenant Governor Kathy Hochul there. Tom, a lot of focus on how the federal government has operated through this, but let's talk about New York City a little bit as well. The mayor of New York City, Bill de Blasio, in early March was going around telling people to get out on the town. I think we need to be very clear that mistakes were made all round.
Yeah, mistakes were made all around, but I'm looking at the here and now. And, John, to me, the world changes June 5th with an unemployment rate over 20%. All I know, John, my only observation in Manhattan is we got to get the stores open in a sound and sensible and safe way.
There's a lot of economic pain, and I think the New York Lieutenant Governor feels that pain as well. She understands. I certainly heard that over the last couple of minutes. From New York City this morning, good morning to you all. This is Bloomberg.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
He does! Fabry wins it!
To standout stations and podcasts. Stay in touch with TuneIn.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
It's TuneIn Sports on this day. On this day in 1951, after going 0 for 12, Major League Baseball legend Willie Mays connects for his first Major League home run.
There's a drive to left. It's well hit. Way back and gone. Willie Mays with his first home run of the year.
To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
It's hard enough to forecast where the economy is going to be going over the next several months or quarters. Forecasting where potential output will be in the next several years is even harder.
The behavior of the U.S. stock market is very unusual. Every other financial market essentially is pricing in something closer to a euro.
Economic forecasts are hazardous at best. They're even more so now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell. Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene. We welcome all of you to our simulcast. John says simulcast. I say simulcast on television and radio worldwide. Thrilled you're with us today. Coming up, a really important conversation on the global markets. The news flow today, absolutely extraordinary. We've really been focused on Hong Kong with conversations with Christopher Patton and Jonathan Fenby. But, John, right now we've got to turn to the American reality, which is claims surveyed again to be over 2 million.
Median estimate, Tom, 2.1 million. A lot of pain. We're near, I think, around 40 million over the last 2 months or so. So quite clearly, the labour market is in an absolute mess. And for a lot of people that make up that statistic, Tom, it is really painful. I think it would be a mistake to think the policy effort was done. It's not. There's certainly a debate down in Washington on what to do next on the fiscal side. But let's not forget the monetary policy side either. The ECB meets next week. They've been flirting with doing more. The Federal Reserve meets the week after. And I think we have to transition now away from an emergency response to forward guidance, the future. What does policy look like? That's going to be where the effort transitions in the next several weeks, Tom.
I really agree on the idea that we're really shifting to forward guidance. Lisa, part of that is the bond market, the debt market reaction to all of this. And it's got to be a better, a more constructive debt market after you see what equities have done.
Well, and we have had, yields have absolutely been flat or going down, certainly in the corporate debt market. I just want to build on something that John said, and I think that report that we're going to get today showing more than 40 million job losses over the past 2.5 months highlights a shift from temporary job losses to permanent job losses. And I wonder how much the policy conversation is going to change and how we reskill individuals to take over a new economy, given the fact of the job destruction that we're facing right now.
Well, we'll have to see. John, once more before we get to Terry Weissman, really thrilled he could be with us right now. John, what part of the market, what part of the data check this morning interests you? To me, it's boring, but it's not, isn't it?
No, I think what we've got to focus on in the equity market, Tom, is whether this cyclical rotation continues. Lift the lid on the indices. Lift the lid on the S&P 500. See what's moving, what isn't, what's lagging, what's leading. That's been the story of the last couple of days. We've had some head fakes over the last several months. That transition away from the defensive growth, so to speak, the tech names. And I think we're all trying to work out how sustainable the reopening rotation is in this equity market. That, for me at the moment, seems to be the focus, Tom.
On radio and television, a must-listen for Global Wall Street right now. Terry Weissman is just really a most remarkable strategist, because he's not. He's Vassar in Harvard Economics, acutely sharp on emerging markets and international economics, and pulling that into a strategy for Australia's Macquarie Bank, and we're thrilled he could join us this morning. I've got to go right to the dollar and the dollar dynamics, Terry. The president, I think he wanted weak dollar, and now I think he wants strong dollar. What dollar are you predicting?
Yeah, so this is interesting, and I should say before you and that, good morning to all of you this fine morning. We have a view of the dollar that sees it actually weakening versus the euro and sterling, somewhat at least, going into the back half of this year. Whether it's what Trump wants or not, I think is not what's relevant here, although, what Trump is doing is going to have some say over what the dollar does, and particularly the election, in our view, because we think that one of the issues the market has not factored in recently are the risks around the U.S. election. And I'm not speaking so much about the presidential election, but of course, if the Senate goes Democratic, I think that the situation with regard to taxes could change in the U.S. We could see a shift away from U.S. equities if the prevailing winds shift towards higher statutory corporate tax rates or wealth taxes or capital gains taxes. And if that were to happen, we could see the dollar start to weaken against some of the majors as asset allocators around the world simply start to move away from U.S. equities. So that's clearly one thing that could take the dollar a bit lower relative to the euro potentially, and that's certainly something that's tied to U.S. Political risk that's out there that I think the market's not taking too much account of right now. I think the risks are mild, however, right? I mean, even if we were to get something like this, there's still some issues prevailing to the downside on the euro. We can see the dollar weakening, but not that much against euro and sterling going into the back half of this year.
Terry, you touched on the $1 trillion question in the FX market. What's the driver? What's the dominant driver? Is it rate differentials or is it policy? Is it fiscal policy? Which one is it at the moment for you, Terry?
Well, I think it's more rate differentials at this point. It's been very difficult for the market to make distinctions between fiscal policy across countries, let's say. When we're talking about trillions of dollars of spending and loan guarantees and other ways in which fiscal authorities are going to try to influence the economy, it's very, very difficult for I think, in my mind, for traders, even FX rounds, to say, okay, well, that country's stimulating more and that country's stimulating less. It all turns into a mismatch at some point, especially insofar as we're not getting very much guidance with regard to when all of these policies will be ending. I will say this, however, to the extent that fiscal policy is not just stimulatory, but has other effects as well, it could be important. And I'll bring up here the case of the pandemic emergency relief fund that the EU is thinking about going forward with. Now, as you guys know, about 750 billion euros all told in grants and loans. That's obviously going to be, to some extent, stimulatory. But I think to the extent that it's going to help the euro in the back half of this year, it's not because it's stimulatory, but because it speaks to one of the most important medium-term risks and longer-term risks of the euro, which is the existential risk of an ultimate euro breakup. As we see more EU unity because of this fiscal stimulus, it could help the euro. But that's a special case. I think in most instances, fiscal policy, at least the magnitude of it, is not that important. And it will be things like rate differentials that drive these currencies.
All right, Terry, let's talk about rate differentials in an era of yield curve control. John and Tom have been talking about this extensively. We've heard from Fed officials this is clearly something they are considering. If the Federal Reserve does peg the yield curve at a certain place, if it commits to buying enough treasuries to keep it there, what does that mean in terms of currencies? Does it dampen all the volatility? Does it give a lift to the dollar?
I think it's going to dampen volatility. I don't think it's necessarily going to give a lift. And of course, this is all, we all have to consider this in relative terms, right? Is yield curve control better or worse for the dollar than, say, the alternative strategy that Fed might have pursued, let's say, in an alternative universe, which was to go to, say, negative rates? For the dollar than if it were to do yield curve control. The problem with yield curve control is that it's a very, very tricky thing, of course, because if you were to peg, let's say, the 3-year yield or the 5-year yield to a specific level, you would have to issue policy guidance in respect of the short term or the overnight rate, which is consistent to where you are pegging the 3-year yield or the 5-year yield. If you make a mistake in that regard, you may have the market choose to either buy 3-year paper or 5-year paper aggressively or sell it, in which case the Fed would lose control of its balance sheet. If it were to do that, i.e. to lose control of its balance sheet because it pegged the yield in the wrong place, then I think you would have a problem for the dollar. But let's assume for now that the Fed is pretty wise and savvy about this, and that when it pegs the 3-year yield or the 5-year yield, it will do it in a manner that's consistent or at a level that's consistent with the forward guidance it's issuing. In which case, the Fed may not have
Terry Wiseman of Macquarie with us on Tom Keene's favourite subject. Terry, this drives Tom Keene totally insane, but I wonder whether it sounds more dramatic than it actually is, because if they do go forward with what Williams and Clowder have talked about in the last couple of weeks, all they're basically saying is that yield curve control is the following. It is a complement to forward guidance and date contingent forward guidance, and basically they're just going to turn around and say for the next 2-3 years, say, we'll sit on yields out to 5 years, 3 years, whatever it might be, in line with the forward guidance. And guess what? The market's already there, Terry. The market is in line at the front end into the belly with the Fed funds rate already. So hasn't the market already done this work, Terry? Isn't the Fed just basically saying, here's the cap?
So I agree with Richard Clowder 100% that yield curve control is complementary and it has to be done as a complement to forward guidance. But there's the rub, right? If they were to make a mistake or maybe the market misinterprets them as issuing a forward guidance which is not consistent with the yield at which they're pegging the 3 or 5 year bond or the 10-year bond. Then you have a problem. You have to thread the needle a little bit here, right? You have to make sure that the forward guidance that you issue is specific enough that the market always interprets it to be consistent with the yield curve control peg that you're engendering to promote here. That's important. I think, but like I said earlier, I think the Fed is savvy about this. The fact that people like Richard Clark are speaking about yield control in terms of a complement to forward guidance and consistent with forward guidance suggests to me that there won't be a problem when the Fed does this. Certainly not for the dollar.
Terry Wiseman of Macquarie on the latest with the Federal Reserve. Tom, I know this drives you absolutely insane. And I think as one part of a bigger story, I think it drives a lot of people insane that the market has got involved, the Federal Reserve has got involved in just setting prices, and not just in the Treasury market, but through credit, and not just in the United States, but we're seeing it worldwide.
I'm going to give major credit here, John and Farrow, to Timothy Geithner. He just said, look, we got to go out a long time to heal these various crises. There's a headline percolating out right now, John, that the Swiss National Bank's got to dive in and buy more equities, and particularly tech equities. Is buying Amazon for a central bank that much different than the belief of yield curve control?
Well, that's the extreme, isn't it? That's just one way of getting your currency down. Another way of getting your currency down is negative rates. And the UK, Tom, I would say that over the last few weeks, there's been a pivot in the UK, not just from the governor, but from other officials as well. They are actively flirting with negative interest rates. I have no idea if they will go through with it, whether they're just trying to encourage the market to take rates lower. But let's be clear, they are actively flirting with negative rates in the UK now.
No question. And I go to June 5th, John, and the jobless claims here at 8:30. Come on. What are we going to do in this country on our theories with 20% unemployment rate?
The data, 19 minutes away. The coverage continues from New York City this morning. Good morning. We're live on Bloomberg TV and Bloomberg Radio.
Now, with the latest news from New York City and around the world, here's Michael Barr.
Lisa, thank you very much. It took less than 4 months for an unseen enemy to kill 100,000 Americans. It was unknown how bad the coronavirus pandemic would get when the first known virus-related death happened on February 6th. As more Americans re-enter society, Dr. Anthony Fauci, the nation's top infectious disease expert, endorses mask wearing.
This sort of respect for another person and have that other person respect you. You wear a mask, they wear a mask, you protect each other. I want to make it be a symbol for people to see that that's the kind of thing you should be doing.
Meanwhile, the Las Vegas Strip plans to reopen early next month. Beijing's announcement of their new national security bill for the city sparked renewed protest activity inside Hong Kong. Pro-democracy activist Joshua Wong pleaded to the U.S. to impose sanctions to put pressure on mainland China.
We urge President Trump to echo on the recommendation of Secretary Pompeo to enhance the economic partial sanction on Hong Kong's red capital.
The mayor of Minneapolis says criminal charges should be filed against the white police officer seen on video kneeling against the neck of a handcuffed black man who died in police custody. Mayor Jacob Fry says that Officer Derek Chauvin should be charged in the death of George Floyd. Video recorded by a bystander shows Chauvin with his knee on Floyd's neck for several minutes as Floyd gasps for breath on the ground with his face against the pavement. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
Imagine being denied an apartment because of your religion or your race or because you have children or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD. HUD.gov/fair housing. That's HUD.gov/fair housing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
This is a message from the RNLI and Her Majesty's Coast Guard. Beach lifeguards can't be everywhere this summer, so they can't always protect your family, but you can. So keep an eye on your loved ones. Avoid taking risks in the sea. Don't use inflatables. In an emergency, dial 999 for the Coast Guard. Get more advice at rnli.org/beach2020. Thank you.
The Right Time with Bomani Jones.
While he was gone, Al had some kind of vote to make him the managing. You remember he used to come up all the time in the Raiders game that he was the managing general partner. By the way, don't forget, there was a lot going on in Munich. But you know how tired that man was to come back and find out that Al Davis had strong-armed his team from him while he was gone?
Search The Right Time with Bomani Jones to listen.
Calculations and the modeling that we do remains very sensitive to unemployment. It remains very sensitive to GDP, to housing prices. And so as we continue to look at what we think the future trajectories are of those, we'll continue to make appropriate decisions around reserving into the future.
Citigroup CEO Michael Corbat there on the situation in the U.S. economy and reserves of big banks in the United States. Big banks have had quite a run over the last couple of days. On the year, the S&P 500 banks index down 30%. But what a retracement just in 2 sessions. Your equity market this morning up by 4 points on the S&P 500. No big moves here, up by around about 0.13%. Tom Keene, the story, the rotation into the cyclical areas of the market from growth to value. And the S&P 500 banks are up 16% in just 2 trading days.
And John, the 2 trading days is a key thing. If they can put this together over 1 week, 2 weeks, 3 weeks, that's an impressive moment. Right now, Gerard Cassidy joins us with RBC Capital Markets. We welcome all of you on Bloomberg Radio, Bloomberg Television. As John would say, it's a simulcast, and we're thrilled you're with us. Gerard Cassidy, I know John wants to talk about the equity markets. We're going to get a claims report here in a moment. It's going to show horrific unemployment in your state of Maine. How do banks prosper with 20% unemployment?
The unemployment rates that we've seen are extraordinarily high. None of us have ever witnessed this type of unemployment. But we have to remember that the unemployment number, though it's extremely high, the unemployment benefits are extremely positive for many workers. So I think what you're going to see is as the economy opens up, these people will get through, hopefully, this downturn with these elevated employment benefits and then get their jobs back. But you're right, it is a challenge for the banks, and the credit picture, as you've seen, has deteriorated significantly for these banks.
Gerard, I'll jump in here. I think we've got some technical difficulties, so forgive us for that, and thank you very much for your patience. Let's talk about the rate story and why some people don't believe in this rotation into the financials. It's because they listen to Federal Reserve officials, and those Fed officials tell them rates aren't going up for a long, long time. Therefore, why do I want to own the banks, Gerard? What do you say back?
I think one of the things we have to look at, John, is I think you pointed out year to date, the stocks are still down 30%. So we're nowhere near the levels we were at the end of 2019. So there's still real value here, even though the rate environment is not as positive for the banks as we'd like to see. I would point out, however, the yield curve is steepened a bit. So that's always positive for the bank's net interest margin. But a low rate environment that we're in today, and like you said, the Fed has indicated is going to stay this way. That is one of the challenges the banks have. But what we're seeing, John, to offset that is the balance sheets are growing for the banks, which is very different than what we saw in 08-09. This growth in the balance sheets will offset the pressure on the margins due to the fact that more people are borrowing, not just through PPP, but also through the commercial lines of credit that the banks are issuing to their corporate customers.
Well, Gerard, you know better than most, that's a double-edged sword. They're extending their balance sheet in a really tough time, in a weak economy. I just wonder how much risk they're taking on at the moment, Gerard.
That's an interesting question because we certainly are seeing a very weak economy, and generally speaking, I think the consensus call, and certainly our call, is that the economy will recover in the second half of the year. Should that play out, then the credit risks are not as high as they may appear at this time. But if we stay in an extended recession into 21, then I'm with you, John, then there's going to be greater credit losses from these loans that are being put on the books. But right now, we don't see that at this time.
About some of the response that we might see from the Federal Reserve. We've been talking about yield curve control. The bond markets are pricing in negative rates. What would it do to U.S. banks if the Federal Reserve were to take rates below zero?
That would be really bad. We've seen this happen over in Japan and in Europe, and we've seen the pressure on the bank's profitability with negative rates. So negative rates would be one of the worst environments for the American banks. We don't see that happening just yet, though, as you point out, and I agree with you, Lisa, that there is futures calling for negative rates. But one of the enormous differences in this country than other parts of the world is our money market mutual fund industry. It's over $4.5 trillion in deposits here. And if we go negative rates, you're going to break the buck in many cases in that industry. And we know that is not acceptable for the money market mutual funds. And they are critical to the plumbing of the banking system and the financial system in the U.S. So I still don't think the Fed's going to take rates negative because of the money market mutual fund industry's importance to the financial system here in the U.S.
Gerard, I'm just wondering, given the fact that we have seen a rally in equities tied to financials recently, what are they currently pricing in, given the devastation that we saw in the share prices earlier in the year? Are they pricing in a U-shaped recovery, an increase in credit card loan losses? What do you see?
I think it's pricing in a recovery, and it may be a U-shaped recovery, certainly not a V-shaped, even though we are seeing some evidence that the third quarter numbers, if the second quarter results for real GDP are as bad as expected, we could get a steep recovery off of an extremely low number in the second quarter. But the banks are pricing in a recovery, and if you look at the valuations to book value today, most banks are trading or on average 80% of book. And to put that in comparison, in 08-09, the low for that valuation in that crisis was 46%. So certainly the banks are not pricing in anything like an 08-09 debacle, but there is going to be some recovery that they're pricing in right now.
Gerard Cassidy, thank you so much. Greatly appreciated today with RBC Capital Markets. John, you always go to book value as well, but it really goes to, given the challenges forward, and now, second wave and this, that, and the other thing. To me, John, the great challenge is, will we see a further roll-up of the American banking industry? People like Cassidy really think there'll just be fewer banks out there in 5 years.
Yeah, he's not alone. A lot of people think that's the direction of travel, Tom. I also think it's going to be difficult for many of these names for people to capitulate on their view of financials at the moment because of the outlook for rates. And I think that is the dominant issue right now, Tom, of what we've seen in the last couple of days. The reopening rotation, is that just a position squeeze or is that sustainable? How durable is that? And I think that's the big question for a lot of people in the equity market.
I totally agree. John, with 4 minutes to go, we must look at this claims report. Let's be clear. It's improving, but at 2.x million, that's not improving, is it, John?
Yeah, improving for who and relative to what? Relative to an artificial forecast that we come up with doing a survey. It's bad. Yeah. It's bad for the people that make up the number. Let's be clear about that. You've got the market conversation. Is it better or worse? Then you've got the economic conversation. Who makes up the data? Who's in pain? And right now, a lot of people in this labour market. That data is 5 minutes away. Initial jobless claims in the United States of America pushing 40 million in just over 2 months. Next up, the median estimate, 2.1 million jobless claims in America. From New York City this morning, good morning. This is Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Debbie Hart is president of BioNJ, which represents the interests of more than 400 New Jersey-based biotech companies. She's also a strong voice in the biotech sector, supporting research universities like New Jersey Institute of Technology. She sees NJIT as a valuable partner in attracting venture capital and biotech startups to the Garden State.
So the number one reason that companies come here to New Jersey for the biotech industry is for our talent. We estimate that there were about 30 biotech companies in the early 90s in New Jersey, about 80 in 1998. Today there are more than 400. And that growth continues, and it's come from every possible angle. Other countries, other states, they've spun out of our academic institutions as well as our biotech and our pharma companies, and we expect that growth to continue long into the future. And NJIT is a pipeline for talent, for companies, for entrepreneurs to do that important work.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. President.
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible,
whatever remains, however improbable,
must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
With the shift to remote working, video conferencing has become the new normal to keep your business running. But is it reliable and secure? Cisco WebEx is committed to the highest security standards and already trusted by both small businesses and many of the world's largest organizations. Call, message and meet securely with Cisco WebEx. Sign up at cisco.uk/work-from-home. When secure remote work is critical, WebEx is essential.
From New York City for our audience worldwide, this is Bloomberg Surveillance, live on Bloomberg TV and on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz as we get data in the United States of America, and a big focus, Lisa Abramowitz, on one data point: initial jobless claims.
Yeah, and they are just coming in right now, slightly above the expectation of surveyed economists by Bloomberg. 2.123 million individuals filed for jobless claims over the past week. The number that I'm really watching, and this is something a lot of people are going to be analyzing, and that is continuing claims. They came down significantly from the prior week to 21 million from more than 25 million the previous week. My question, John, does this show that the reopening of the economy is actually leading to a reversal with people getting brought back into the labor force?
The data in isolation is absolutely ugly, but you pick up on the key point for market participants. What's the direction of travel, Lisa? And Tom, it's about that sequential month-on-month improvement that we're about to see in the next several months. June better than May, July better than June, August better than July. You want to see more of that in the months to come, and we're seeing just a little hint of it on the screen this morning.
Yeah. Well, I like the phrase hint, John. I'm looking at the Bloomberg here, folks. This outstanding, by the way. For those of you on radio, I'm showing it on TV. It's real simple. It's a Bloomberg terminal on an iPhone, and all I can tell you is they got it right. John, futures up 2, Dow futures up 144, and the VIX floating at a 28.25. I would suggest it's an economic report that the market is at least comfortable with. What do you think?
And expected. I would agree with you as well, Tom. Let's bring in our guest this morning. Steve Risciuto of Mizuho will be weighing in on the situation. Steve, your first take, please, on the data in America.
Been rolling through in the last minute or so is exactly correct. What you're seeing is expectations of declines being outpaced, or I should say underreported. So basically the expectations are much weaker than the actual data is coming in. And it's not just the continuing claims drop, it's also in the durable goods report, and more importantly in the shipments of non-defense, non-aircraft capital goods, which were expected to be down 12.2, coming in at down only 5.4%. It's this kind of expectation being ahead of what's actually happening in the economy, which I think will be the next phase as people begin looking towards the recovery phase of this expansion, rather than worrying about how bad was the second quarter.
Steve, you're just one of the great dynamic economists of always looking at the movement and the change. Let me ask you a question I've never asked anyone before. If you come out of a pandemic, as we clearly are, what's the rate of change to a better economy? Do things get better suddenly, or is it slow motion?
I think I think it's a little bit of, it's not a V, but it's more like a swoosh. Let me kind of explain it that way. The big drop in the second quarter, if let's say it's 20%, just for argument's sake. Some people think it's 30, some people think it's 40. 20 is just an easy number. Down 20%. How much could Q3 be up? It could be up 10%. That's the scenario we're looking for. We're actually looking for an economy that will be back to zero on a year-over-year growth rate basis by the second quarter of 2021, which means it'll be we'll probably mark the recession as beginning in March, so Q1 and Q2 of 2020 will be the recession, and then the recovery will be Q3 to Q2 of 2021.
Steve, to me, the highlight of this report is the continuing claims. I find this the most interesting aspect of recent jobs reports. Amid this carnage, how many individuals in the United States are actually receiving jobless benefits? Interesting to see that it came down somewhat significantly over the past week. How much is this data adjustments versus, say, a positive sign that people are actually getting rehired as economies reopen?
Well, you have to understand, we live in the New York metropolitan area, and, what's happening here is not what's happening in many other parts of the country. And, in fact, what's happening in many other parts of the country are that these adjustments are taking place, and people are going back. People are going back. You look at the data that we have in terms of credit card activity, in terms of cell phone mobility. We're seeing a dramatic rebound in all that level of activity as people in the unlocked states and in the states that are opening up more quickly than us are getting back to their normal lives. Right. And that's what I think you're seeing reflected in that continuing claims number this morning.
Yeah, Jonathan Ferro, I really want to point out that we've seen that yield curve shift with a little bit steeper yield curve and a higher yield in the 30-year bond. Again, that better feeling that you get out of this grim report?
Yeah, let's be clear. This is still a grim report, but it's about the data over the next several months and how it improves, I'm sure, for many market participants. But, Steve, problem I have is that there might be a willingness to extrapolate out that initial quick improvement from going from shutdown to reopening and extrapolating that out into next year. And I know the economic debate at the moment is a two-speed recovery, initially quickly, and then more slowly as the months progress. It becomes a long slog to get that unemployment rate down. Do you sympathize with that view? Does that resonate with you, Steve?
Well, you got to understand, there's two things you're talking about here. You're talking about the pace of economic activity, and you're talking about the labor market developments. In a recovery phase, productivity always exceeds expectations. So therefore, the jobless pull down will be much slower than the economic recovery. That's always a phenomenon that happens. This time it's likely to be a long one as well. So yes, you are going to have that two speeds between what happens in the unemployment and in payroll employment and things of that nature versus what happens in underlying economic activity. You're also going to have a sector shift between which portions of the economy do better coming out of this versus which portions of the economy were leading the employment gains before. And therefore, there is an adjustment process that takes place as people are retooled or people refine themselves and relocate to areas where things happen. So the unemployment environment is going to remain dramatically slower on the improvement side than will the GDP numbers.
Stephen Rasciuto of Mizuho Securities, Chief U.S. Economist. That's exactly where I wanted to go. The skills gap, which we're going to be experiencing and are experiencing as some jobs get eliminated and others get created coming out of this era. How are we going to bridge that gap? Whose responsibility is it, the companies or the government?
Well, if you look back at long-term history, the answer is it's primarily corporate's requirement to do it, at least in this country. We've abdicated a lot of that because we've gone to very short-term earnings gains environment where everybody's focused on a 10% earnings growth. But the government doesn't do a particularly good job of training people for the alternative sectors either. So I think what we're going to see is an environment where over time the market itself will take care of it. I don't expect us to get much benefit from either government programs or from corporate programs itself. It'll be up to the individual to retool themselves, which is the reason why we've seen it being on a slower trajectory in each of the last couple of expansions than the ones we had immediately after the war.
Yeah. Stephen, the glide path on that second look at GDP was a little bit down. I don't want to make too much of it. I know you need time to massage the data. What's the worst GDP will be on an annualized basis? Forget about the drama of 90 days. What's the Rasciuto calculation of how deep this decline is going to be on an annual GDP basis?
Yeah, somewhere between 3 and 3.5%. That's a pretty big downward movement for an annual basis. Yeah, but I think about 3 to 3.5%.
John, I
Steve,
think
what's
that's
the value of annualizing the quarterly figures? Can we talk about that, Tom? I think it's really important. The value of annualizing these quarterly figures, what's the value in that? Over the next quarter, we'll get a terrible number for Q2. People will annualize it. And I just wonder how useful that actually is.
Steve, answer
the annualized quarter-over-quarter numbers. I'm sorry, I just want to get in. Tom, were you asking me the annualized quarter-over-quarter number, or you were asking me for the annual for the year? I wanted to make sure I mentioned the right thing.
No, the annual for the year. I mean, the issue here, folks, this is really important. We're going to stop the show right now. This is really, really important. As John correctly brings up, there's 8 ways to slice this, and the media loves to go to the drama of what happens in 90 days. The world's coming to an end. Stephen Rasciuto, is the world coming to an end, or is it better 12 months, -3, -4?
It's better 12 months from now. The world is not coming to the end. And, yeah, as I indicated before, and I'm sorry I interrupted you guys in your conversation earlier, just wanted to make sure I gave the right number. I think the year-over-year numbers will, for 2020, will be down 3 to 3.5%.
Steve Rasciuto, don't ever apologise for interrupting the conversation between Tom and I. Half the audience are happy you did. Steve, fantastic to catch up with you. Tom, as we count people down to the labour market data, around about a week away, next Friday, I think the median estimate so far is something like negative 8 million. But you've been focused on it, Tom. The unemployment rate is going to push towards 20%. And looking at our median estimate in our survey, 19.5 is kind of what people are looking for. 20% unemployment in America. That's the reality of the situation for a lot of people.
And we are colored folks. I really want to make this clear. Lisa, where she lives, where I live, where John lives, we're colored by what we anecdotally see as you do coast to coast and around the world as well. John, I would say it's an intellectual migration out to maybe a 27% unemployment rate, and there's all sorts of shades of gray from 20 out to 27% as people guesstimate this.
But Tom, you've touched on something really important. Our views are coloured by where we're based, and right now we can't get out of our apartments in New York City. And I do wonder whether the estimates, the expectations are distorted by a home bias. And that home bias right now are the high density, high impact cities like New York City. If you live in New York and you are an economist or a market participant, I think it's quite difficult to be optimistic. If you manage to get out of New York and look at what's happening in the rest of the country as we reopen, I think there's a lot more people out there that believe we can normalize quicker.
I looked at the pandemic statistics comparing New York and New Jersey, John, with North Carolina. Of course, the uproar over the Republican convention. And it's amazing how North Carolina is radically different in pandemic calculus, if you will, than the big urban areas.
But it's the main focus for this market right now, the reopening of the United States and the global economy for that matter too. As we count you down to the opening bell, around about 49 minutes away, your equity market shaping up as follows. Futures positive, around about 3 points on the S&P 500, up a little more than 0.1% after 2 big days of gains with a nice cyclical tilt beneath the hood. We go higher for banks, higher for the travel stocks. It's the equities that were left behind that continue to improve over the last couple of days at least. In the bond market, yields unchanged, 0.68% on a US 10-year. And in foreign exchange, we've touched on this through most of the morning, no big moves, but as the session grows older, the dollar grows just a little bit weaker. Euro dollar advancing 0.1%. From New York, this is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, thank you very much. Defying a threat by President Trump, China's legislature has approved a proposal to impose a highly contentious national security law in Hong Kong. It is an unprecedented move that critics say threatens fundamental political freedoms and civil liberties in the territory. Beijing's announcement sparked renewed protest activity inside Hong Kong. Pro-democracy activist Joshua Wong.
With such evil law suggested by Beijing to impose in Hong Kong, we really encourage and enhance more global community to keep an eye on Hong Kong to oppose the national security law.
Secretary of State Mike Pompeo says it confirms Hong Kong is no longer autonomous from China. Violent protests over the death of a black man in police custody broke out in Minneapolis for a second straight night. On Monday, a police officer pinned George Floyd's neck to the ground with his knee for several minutes just prior to Floyd's death. Mayor Jacob Fry says he does not understand why criminal charges have not been filed against the officer, Derek Chauvin.
That's why I called for the county attorney to charge the arresting officer.
During protests last night, there were fires and looting. President Trump appears to be moving forward on threats against Twitter and other social media companies. Today, he is expected to sign an executive order that will scale back the legal protections those companies have from lawsuits and liability for the content post on their platforms. Live from the Bloomberg Interactive Brokers studios, this is Global News 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. A sort of mini surge in housing is underway. That's according to Michelle Meyer. She is head of U.S. economics at Bank of America.
You'll get this initial bounce given that pent-up demand and given the fact that a lot of people have needed to relocate or looking to make lifestyle changes on the back of the coronavirus and an extremely large toll it's taken on people.
But Meyer says after the initial rush of people relocating because of the work-from-home thing and job changes, the housing market could take a tumble.
Equilibrium rate of activity for housing than you were pre-COVID levels. And that's a function of the unemployment rate, of income growth, of access to credit. But the fact that at least you are seeing this initial pop and it's happening so early, it is testament to the idea that housing did not have excesses. It's easier to rebound when you enter a downturn without that excess.
And Meyer says urban multifamily apartment prices may fall fastest in the coming dip, and we'll have more on that coming up in tomorrow's report. And that is your Bloomberg Real Estate Report. I'm Denise Pellegrini.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment. Feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
If they want to impose the national security law, they are prepared to kill the golden goose to who laid the golden egg. They give up Hong Kong already.
Jimmy Lai, the Next Digital founder, weighing in on the situation in Hong Kong. Tons of pushback to the Chinese Communist Party worldwide over the last couple of days. The market not really responding to it. Equity futures unchanged going into the cash open around about 43 minutes away. Alongside Tom Keane, I'm Jonathan Ferro, together with Lisa Bramwitz. Before I step away from Bloomberg Radio and Bloomberg TV to get ready for the next hour on Bloomberg TV, looking ahead to an interview with Erin Brown of PIMCO. Also, Tom catching up with Dan Skelly of Morgan Stanley. Morgan Stanley have really been out front on the following story: the reopening rotation and the recession playbook. They suggest works still in this environment where you pivot as the economy bottoms, you pivot to the more cyclical areas of this market. And over the last couple of days, that's worked in a big way.
John, I got to do a major shout out. Michael Wilson has really been on. He was cautious. He was a piñata why the market went up, and then he got lucky, of course, with the pandemic crash that we saw. And he has absolutely nailed the rotation up story. And of course, people like me, John, I had to go into therapy yesterday over being in the triple leveraged all cash fund. I mean, I'm just devastated. But
Tom, be transparent about what therapy is in the Keane household. You don't get someone on video call and speak to a therapist. It's a bottle and it's got a name on it. Was it Jim? Who was it? Who helped you out this time? Who was the therapist in the last 24 hours?
It was very Petey. Pete was the name. It was
okay.
Very Petey. John, have fun.
Pete helped you out this time around.
We'll see at the opening here as well. There are historic moments, folks, where you speak to someone, and with Christopher Patton, it can be 5 years ago, 10 years ago, 20 years ago. It was an honor for Francine Lacroix and myself to speak to Lord Patton today as his Hong Kong went to a different phase, a different history. Here is Lord Patton.
Xi Jinping. Xi Jinping is a new sort of Chinese dictator. Well, when I say new, different from his immediate predecessors. Certainly in the 1990s and since 1997, while they've been far from open in Hong Kong or in China, on the whole, Chinese leaders kept to their agreement on one country, two systems, that Hong Kong could continue with a high degree of autonomy, with its own freedoms. What we've seen with Xi Jinping is a determination to strengthen the party's hold over everything. He's been throwing China's weight around in a way which is a danger to all democracies around the world. And I think he needs to be called out. And he's taken advantage of this coronavirus, which, of course, has been more difficult to deal with the way it was covered up initially by secretive communist officials. He's tried to take advantage of that, not only in Hong Kong, but there are incursions by Chinese troops into India. They've been throwing their weight around in around Taiwan. They've been throwing their weight around in the South China Sea, despite the promises they made to President Obama. So this is down to Xi Jinping, who is terrified of having to deliver in Hong Kong the promises that people were made, that they could live under the rule of law in relative freedom.
We see this, Lord Patton, on a week where Stanley Ho dies. There are the merchants of Hong Kong going back centuries. How would you suggest the business leaders of Hong Kong will react to this? What would be the best Patton path?
Well, I want to say this very clearly. When I was governor of Hong Kong, there was great support from the American Chamber of Commerce, from the United States in general, for what we were trying to secure in Hong Kong. And even though I had worries about China, as we all did, worries about a communist system, not about Chinese people, but about communism, I used to lobby every year Congress to give China most favored nation status, relatively open trade, although then outside the WTO rules. And I used to also argue that whatever happened, we shouldn't endanger the well-being in Hong Kong. And that's still my feeling. I think that what should happen, I hope, following President the Secretary of State's Pompeo's understandable reaction, is that we should form together countries which will make Hong Kong, will make China pay for what it's doing in Hong Kong. I hope that we will stand up for Hong Kong, as over 500 political leaders and church leaders and others around the world have already done. I hope we'll be together, and I hope that business will welcome that, because there's no question at all that if you undermine the rule of law in Hong Kong, then you start to make Hong Kong a less important financial hub in Asia. It's already responsible for maybe 2/3 or more of the direct investment which goes into and out of China. And I just think that a lot of people will think about running their businesses from Hong Kong, or about recruiting people to work in Hong Kong. So I hope business will put, without too much nervousness, fairly to China what they actually think.
Lord Patton, your comment from 23 years ago, your historic single sentence, I have relinquished the administration of this government. God save the Queen, Patton. What is your advice this morning to the Secretary of State of the United States as you call for an allied response, a developed economy response? What would be your counsel to Mr. Pompeo?
My counsel to Mr. Pompeo would be, first of all, to thank him for the interest he's taken in Hong Kong, which I think is widely and enthusiastically accepted in Hong Kong. He's not interfering in Hong Kong. He's expressing the sentiments of a democratic politician about the possible fate of what was a community under the rule of law. So I'd thank him for that. The Chinese don't understand that the problems in Hong Kong are because of them, not because from people from outside. But I would also ask him to remember that liberal democracies around the world, and I mean the word liberal not in a particularly American sense, but in the classical sense, open societies around the world are always strongest when they work together. The world did so well for 50 or 60 years because under American leadership, Europe, Japan, Canada, Australia, United States, all of us worked together under American leadership. And I hope that that's what this administration or a future administration will do, because I've got that China is an enemy to us now. I'm sorry to say that, but that's how it behaves. Not Chinese people, but the Chinese Communist Party.
An extraordinary conversation on this day with Lord Patten of the United Kingdom, and of course on his Hong Kong. He is 28th governor of Hong Kong. We're going to drive forward the conversation, particularly on banking. Our Eric Schatzker in conversation with Michael Corbat. Look for that in the 10 o'clock hour. For Lisa Abramowitz and Jonathan Farrell, I'm Tom Kiwi. Thank you for listening to the simulcast. Really something unique on radio and on Bloomberg Television. The markets lift off of better claims data than the grim that was expected. This is Bloomberg.
Not complete.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
Picture this. Small businesses on eBay are working to
get things moving.
Sending spices to novice cooks.
Airbands to kids.
Desks for home offices.
Delivering the goods.
Shipping footballs.
Fruit trees.
And dishwashers.
Thousands of small businesses on eBay are helping to keep the nation going. They are individually brilliant, stronger as one. Buy, sell, eBay.
Life isn't always easy at the moment. We can feel frustrated, miss loved ones, or get anxious. But there are simple things we can all do to look after our mental well-being at this time. Every Mind Matters will get you started with personalised tips and advice from the NHS. Whether it's dealing with stress, techniques to help you relax, or simple tips for better sleep, we'll help you find what's right for you. Search Every Mind Matters today.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Let's be honest, we all spend too much of our day on social media. But at least you can spend your endless scroll time to discover new things on TuneIn. Follow @TuneIn on Facebook, Twitter, and Instagram to always be in the know about the best new stuff streaming in the app. From breaking news stories and live sporting events.
Yeah, but it's unique times. I think there's unique circumstances, and we're trying to
standout stations and podcasts. Stay in touch with TuneIn.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL Show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Introducing a new podcast, ESPN Daily.
hosted by me, Mina Kimes. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. The best sports story all day, 20 minutes a day, 5 days a week. ESPN Daily.
Search ESPN Daily to listen.
To get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business Radio.com and iHeartRadio apps and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be. The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City and points beyond to our worldwide audience. A mixed futures market with the S&P and the Dow up fractionally, while the tech-heavy NASDAQ is in the red as tensions between the U.S. and China remain at heightened levels. Once again, jobless claims, they came in at a painfully high level. But the good news, I guess if you can call it that, is that they continue to moderate. Let's get the latest on equity futures with Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at right here?
Well, Paul, you mentioned NASDAQ futures being down. Social media companies are a big reason why. You've got Facebook lower by 3% in early trading, Twitter down more than 5%. President Donald Trump plans to sign an executive order today regarding social media. That's according to Press Secretary Kayleigh McEnany. Now, the Washington Post reported that the order will seek to limit legal safeguards on the site's content. And then you look at Dow futures being higher. Boeing, a big reason why. It's up 5%. The plane maker is eliminating about 6,800 jobs in the U.S. and will notify the affected employees this week. Now, CEO Dave Calhoun said last month that Boeing will need to eliminate about 16,000 jobs, or 10% of its staff. This is a first step toward that goal. American Airlines lower by 1.5%. The carrier plans to cut about 30% of management and support staff as part of a plan to reduce costs. American's also offering an early retirement plan and putting limits on employee vacations. You know, we've got earnings out from the dollar store chains. They're going over well. Dollar Tree up about 10%. Earnings for the fiscal first quarter were well above analyst average estimate in a Bloomberg survey, and sales also beat projections. Dollar General higher by 1.5%. Now, the retailer's fiscal first quarter sales rose 22% at locations open more than a year. So why isn't it up more? Well, Dollar General's shares rose to a record yesterday, while Dollar Tree's are lower for 2020. Not quite as far down as they were before their results came out, nonetheless lower. Toll Brothers up 8%. The builder of luxury homes said deposits from prospective buyers have climbed 13% in the past 3 weeks from the same period last year. Now, Toll Brothers results for the fiscal second quarter beat projections. Workday's up 5.5%. The maker of internet-based business software posted fiscal first quarter revenue to beat estimates, though profit came up short. And also, Workday agreed to a partnership with Microsoft that involves the cloud computing service Azure. HP, though, down 6.5%. The maker of personal computers and printers reported fiscal second quarter revenue that was lower than projections. HP said it was hurt by disruptions at Asian suppliers. And NetApp's lower by 4.5%. The maker of data storage systems expect fiscal first quarter earnings to be well below estimates. Now, that forecast outweighed fourth quarter results from NetApp that beat projections. And one more for you, one of the most active stocks in early trading, the most active at the moment, Hertz Global Holdings down 13%. Billionaire investor Carl Icahn disclosed he sold his entire 39% stake in the rental car company on Tuesday after it filed for Chapter 11 bankruptcy. Icahn took a loss of about $1.6 billion. Wow. Now, he had invested in Hertz since 2014.
Wow, a rare miss for Mr. Icon. Bloomberg Stocks editor Dave Wilson, thank you so much. Well, I guess one of the themes that we've seen in the Trump administration is certainly a sense of deregulation, laissez-faire as it relates to Securities and Exchange Commission requirements for businesses. And the latest in that is the SEC has voted to scale back corporate disclosure requirements as it relates to acquisitions and dispositions and those types of things. To get a sense of what that really means for investors, we welcome Arthur Levitt, former chairman of the Securities and Exchange Commission and a Bloomberg LP board member. So, Arthur, give us a sense of what the SEC is doing here. Is this just another example of the Trump administration trying to pull back some layers of regulatory requirements?
It certainly looks like that. I think that the SEC has not provided enough evidence about how investors might gain from these changes. Now, the final rule requires that financial statements of the acquired business will cover no more than the 2 most recent fiscal years. Now, that just is such a rollback of investor protection. If one of those years is severely impacted by the COVID-19 crisis, will investors have enough information with respect to valuation? How much critical perspective may be lost because of the potentially anomalous period?
Arthur, it's rare that you and I agree, but if I look at Whitefried and Sondy, CFA Level 1, there's a small question of John Deere and their struggles with leasing $1 million. Folks, this is ancient history. This is BL, which is before Levitt. Arthur, 24 months is patently absurd. It's absolutely nuts. Can I ask you a question? Why are we doing this? Why are we peeling back decades of work that Republicans and Democrats did to try to not have Memorex driving around truckloads of bricks booking revenue? Why are we doing this?
Politics, my friend. Politics. This is the era of cutting back regulations without regard for how that will impact.
Okay, Arthur, I don't mean to interrupt, but I'm on my high horse here, folks. I had the day off yesterday. Paul and Arthur,
you're all fired up now.
I've missed so much of this bull market. I had to go into therapy yesterday, and they could only see me at 7:30 in the morning. Arthur, Michael Corbat is going to join Eric Schatzker and Bloomberg at 10 a.m. Are you telling me Michael Corbat, because of politics, wants less regulation?
You bet. You bet.
So, Arthur, I mean,
I'm not going to point it to Michael Corbat because I think he's a particularly effective, balanced executive. But I am going to say that the forces of business community have never been stronger with respect to the regulatory scales.
So, Arthur, is there just for my edification, that probably most of our audience here listening, is there any oversight of the SEC from Congress as to say, listen, guys, you're probably going a little bit too far in terms of deregulating, pulling back some of these protections for consumers and investors?
That's a very good question. Yes, there is oversight, but keep in mind that the oversight in this environment is not particularly favorable to investor interest. So I don't look to Congress to take the SEC to task for scaling back disclosure. I think that really investors are going to have to deal with this by being much more circumspect. If one of the years is severely impacted by COVID, will investors have information they're going to have to search for?
Right. Well, we're going to leave it there. Arthur Levitt.
political judgment.
Yeah, I like that, a political judgment. Arthur, thank you so much. The former chairman of the Securities and Exchange Commission, and again, a Bloomberg LP member on some of the accounting that we may have going forward. Let's account for our good friends at Cohn Resnick. Bloomberg Surveillance, always brought to you by Cohn Resnick. Advisory Assurance Tax for ideas to stabilize your business and find opportunity amid uncertainty. Visit the Cohn Resnick Corona Virus Resource Center at cohnresnick.com/COVID-19. Paul, I mean, we got a bull market. We had Arthur Levin on. He was brilliant as always. You know what? I've only got one thing on my mind, and you're my expert. Do I want HBO or do I want HBO Max or do I want HBO, whatever the third one is as well? Paul, this is the dumbest complexity I've ever seen in the streaming wars. Help me.
I agree with you so much, Tom. I think, the real, beauty and the genius of Netflix is it's just so simple that, they just got it, so simple. You got Netflix and you basically got everything. And now, AT&T is asking you to make some decisions here. Nobody needs to make the decisions when there's so much new technology out there. You just want to say, hey, buy my AT&T streaming product. That's it. But we have HBO Go, HBO Now, HBO Max, so there's a lot of different choices. You get different content here, different price points. I just think it's a tough marketing sell for them. They have some great content, obviously, but, I've seen a lot of articles written by Bloomberg News and our great media reporters out there, and Tara LaChapelle at Bloomberg Opinion talking about, boy, it's just confusing to figure out what you really should be paying for from the AT&T company.
I just totally don't. My head is spinning over it. And of course, for all of our listeners out there, much the same way, I would suggest, Paul, we don't listen to all that. We don't consume all that much of this product, while other people in our house, they do.
They do. And you have to pay attention to those people, right, Tom?
We have to pay attention to them. Right now, we need to consume the news. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. President Trump is threatening social media companies with new regulations or even closure after Twitter added fact checks to two of his tweets. Trump on Twitter says tech giants silence conservative voices. He says he plans to sign an executive order today. New York Governor Andrew Cuomo is again calling on Congress to help states financially recover from pandemic-related damage to their budgets. Bloomberg's Martin DeCaro reports.
At a news conference in Washington, New York's governor let loose on Senate Republicans for holding up aid to states.
Mr. Federal Legislator, you're nothing without the states.
Cuomo argued partisanship must be set aside. Governors of both parties face the possibility of laying off public servants.
How does that help a nation striving to recover economically?
Senate Majority Leader Mitch McConnell has said there could be additional help in a future relief package, but it would have to be narrowly focused on expenses directly related to the pandemic. In Washington, Martin DeCaro, Bloomberg Radio.
Fires burned and looting took place after violent protests over the death of a black man in police custody rocked Minneapolis for a second straight night. Amid the violence, a man was found fatally shot last night near a pawn shop. Angry workers burned tires at the gates of the Nissan car-making plant in Spain and prepared for more protests after the Japanese company said it would shut all its manufacturing in the region. Connecticut State Police say a college student wanted for 2 murders has been captured in Maryland. Peter Frandonia had been the subject of a 6-day search. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. We thank all of you for joining us coast to coast in San Francisco, Boston, 99.1 in Washington, and of course, good morning in New York as well. Paul Sweeney, no question off the economic data, grim as it is, it was less grim in many ways than expected. Futures flat, now up a nice 11 on SPX futures. Paul, Dow futures up 220.
Yeah, exactly, Tom. I mean, now we've got 40 million jobless claims just since the beginning of the pandemic, which is just a horrific number and has real human costs associated with it. But from an economic perspective, the numbers are less bad for the 8th week in a row. And hopefully, we're kind of hitting a trough there.
Well, we'll see. I'm getting out of the triple leverage fund, Paul. I'm going into the triple leverage Amazon fund.
There you go.
Amazon's lagging. Please stay with us through the hour. Worldwide, this is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
Hi, I'm Dan from NatWest Manchester branch. We know life's hard right now, but if coronavirus has affected your finances, we're doing our best to make things easier. If you're a personal customer, you can request a 3-month payment break if you're struggling with your mortgage, loan or credit card. Or if you need help with an existing arranged overdraft, you could get £500 interest-free for 3 months. Remember, every one of us is here to support you. There are lots of ways we could help. Search NatWest Coronavirus.
Eligibility and conditions apply to payment breaks. Overdraft up to your agreed limit if lower than £500.
At Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures remain mixed while stocks in Europe climb as investors weigh increased friction between the U.S. and China against fresh fiscal stimulus in Europe and the latest jobless data. Contracts in the S&P 500 held steady as figures showed another 2.1 million Americans filed for unemployment claims in the week ending May 23rd. Matching estimates, continuing claims fell to 21 million, the first drop in the pandemic era. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 12 points, Dow futures up 222, and NASDAQ futures are down 63. The DAX in Germany is up 0.8%. 10-year Treasury down 7/32, yield 0.70%. Yield on the 2-year 0.18%. NYMEX crude oil is little change at $32.83 a barrel. COMEX gold is up 0.75%, up $13.20 at $17.3960 an ounce. The euro 1.1039 against the dollar. British pound 1.2298, and the yen is at 107.73. And that's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Karen. Greatly appreciate it. Paul Sweeney and Tom Keene, right now an important guest. Paul, here's the history of this, and it's really, really important, folks. I want you to visualize this. And, of course, Paul, visualizing on radio is an art unto its own. Imagine, folks, a yield curve, and imagine little wisps, little fine wisps coming off it, which is the expectation where yields are going to go. They're going to go out there. They're going to be higher and higher and higher. Without question, a lifetime ago, Credit Suisse on Wall Street had the best computer algorithms to display those little wisps of prediction that yields will go higher. Ira Jersey lived this, of course, now running all fixed income at Bloomberg Intelligence. Ira, right now there's a massive wisp out there that sometime, someday, somehow out there, yields are going to go higher. We've been wrong for over 10 years. Why now?
Well, in fairness, Tom, yields did go higher from their lows, right? They just unfortunately came down significantly over the last couple of years as the economy slowed, and it was pretty clear that we weren't going to get a lot of inflation. The market's a little more sanguine now, so if you look at where the market's pricing for yields to go, say a year from now, you're still only looking at a 10-year yield that's going to be something like 85 basis points. So, which is not much higher than it is today. It's at 70 basis points or so on the 10-year. So, the market, I think, has kind of learned its lesson. Coming out of the last recession, everyone thought that all the central bank stimulus, everything that the ECB had done and the Fed had done, keeping interest rates low for longer, doing all the quantitative easing, all of that would spur both inflation and nominal GDP growth, which tends to mean you get higher yields. And, the market now is saying, okay, we know that that's not necessarily going to be the outcome of this current environment, that this is going to be something that's going to take a long time to work through the economy.
So, Ira, you've been in this interest rate game a long time, and we think about negative interest rates in Germany and Switzerland and Japan, and boy, you look at our yield curve, and you could certainly make an argument that we could get there here in the U.S., even though Chairman Powell says he doesn't necessarily have an appetite for that. What do you think the odds are for negative interest rates in the United States, kind of for a longer-term horizon?
Well, I think it's a non-zero probability, but I do think that the Federal Reserve will want to do just about everything that it can to avoid having to cut the policy rate into negative territory. I think they're much more likely to say we're going to keep interest rates, near zero for the next 5 years. I think they're more likely to say that than actually cut to zero or cut below zero. So the idea that they're might do something like yield curve control if the economy doesn't look like it's going to be recovering that quickly as different states open up their economies and the economy starts to get a little better. If it doesn't accelerate more, I think that they would more likely say, we're going to say that, cap 10-year interest rates at 75 basis points. We don't want 10-year yields going above 75 basis points, and therefore we're going to buy whatever we need to in order to keep that yield there. And by doing that type of activity, I think that they're also signaling that while they're doing this is just like quantitative easing was back in the early 2010s, is as they're doing those types of operations, they're definitely not hiking interest rates. And that signaling winds up being amazingly important for the market and also, hopefully stimulating to the economy. The problem that the Fed has and most central banks have in this environment is that they can't control the economic actors and what the economic actors are doing. So until people are back to work and we get some semblance of normalcy back into the world, the monetary policy is not going to be effective, and it's as simple as that.
Yield curve control is a new term, at least for me, Ira. This may be in your playbook, but it hasn't been in mine until the last couple of weeks. Can you define what that really is and why we should care about it?
Sure. So basically this has been tried before. So back during World War II and into the early 1950s, during the Korean War, the Federal Reserve did this, and the Bank of Japan did it more recently in 2016 and onward. And that's basically saying that the central bank is not going to commit to buying a certain amount of bonds, but what they are going to do is buy as many bonds as they need for the market to stay at a certain level. So they might say that we want the 10-year yield to not go higher than 75 basis points. If the yield touches 76 basis points, the Federal Reserve comes in and buys as many bonds, throughout the curve, so 5 years out to 30 years, for example, that they need to in order to keep the 10-year below 75 basis points.
Come on, Hunt Brothers Silver. There's a point where the market tests the theory. What happens when the market tests the Fed's belief in yield curve control?
Well, the Fed's single biggest thing that they can do is buy an unlimited amount because they are not constrained by the amount of money they have, right? So I do think I do agree with your premise that the market will test the Fed's resolve, and they'll say, look, will the Federal Reserve be willing to buy $100 billion, $150 billion in a couple of days in order to keep yields at a certain level? And I think that they will. And I think that if they committed to do that, they will fulfill that promise. And in fact, if you go back to March, they were buying way more than that, right? The Fed was buying tens of billions of dollars a day in order to help market liquidity when market liquidity was so poor. So I do think that they have that resolve. I think that they, if they commit to doing it that way, committing to do yield curve control, they'll stick to it. I think one of the questions now, and one of the big questions is, if they commit to, say, intermediate term yields, as they said in the minutes of the Fed meeting last week, will they let the 30-year go and have the 30-year go much higher? I don't think that that's true, but there is a growing consensus that the curve can steepen a lot.
None of this is in Fobosi. I mean, none of this is in. I busted Ira Jersey's chops this morning, folks. Ira, that was phenomenal. Thank you so much. Had a fixed income for Bloomberg Intelligence. Paul, I'll tell you, it's just these debates are arcane, as they say.
Which is perfect for Ira, because Ira is nothing but arcane.
Futures up 9, Dow Futures up 205, 25,739. This is Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com, download the app, and try it for free. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just go to Babbel.com and start your first lesson in the language of your choice for free. Download the Babbel app or go to Babbel.com and try it for free. That's Babbel.com.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a Bloomberg.
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, That moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
With the shift to remote working, video conferencing has become the new normal to keep your business running. But is it reliable and secure? Cisco WebEx is committed to the highest security standards and already trusted by both small businesses and many of the world's largest organizations. Call, message and meet securely with Cisco WebEx. Sign up at cisco.uk/work-from-home. When secure remote work is critical, WebEx is essential.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working-safely. Stay alert. Control the virus. Save lives.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow, along with Tom Keene and Paul Sweeney. And the opening bell brought to you by SEI. Crisis, bring out the best in people, character, community, partnership, together as one. SEI, go to SEIC.com/IMS. The S&P 500 is higher at the open. It's up 1/3% or 10 points at 3046. The Dow Jones Industrial Average higher, up about 0.6% or 145 points at 25,690. The Nasdaq is lower, down 0.1% or 9 points at 9402. 10-year Treasury down 6/32, yield 0.70%. The yield on the 2-year 0.17%. NYMEX crude oil is up 0.1%, up 3 cents at 32.85 a barrel. COMEX gold is up 0.8% or $13.50 at 17.40 an ounce. The euro 1.1037 against the dollar. The yen 107.71. Tom and Paul.
Thanks so much, Karen. Greatly appreciate it. Paul Sweeney and Tom Keene, and an extraordinary day. I really want to say thank you to particularly Harris Broad and our London team today for our conversation with Lord Patton and then with Jonathan Fenby. I really can't say enough, folks, about the monograph Mr. Fenby put out 4 or 5 years ago, Will China Dominate the 21st Century? It is a beautiful short read, and I also commend you George Magnus, Red Flags, which is more current, a little bit thicker read, but nevertheless very important as well. What I want to do right now, folks, is not so much go, what's the stock market going to do, but what are we going to all do as we look at this historic volatility and this amazing recovery from March. Andrew Sleman with us with Morgan Stanley Investment Management, and he is senior, which means experienced in portfolio management. Andrew, to me, the arch question now for so many of our listeners worldwide is, do I take an index passive approach, or can there legitimately and finally be real value in active management? Where are you on that right now?
Well, it's interesting, and thanks for having me on, Tom. Look, I run enhanced index products, and I run very, very active products. I'm a believer that buying the market is an approach, and I'm a believer that owning specific stocks you can make a lot of money in. What I am not a believer in is owning lots and lots of stocks, paying lots of fees, and ultimately all you're really doing is owning the index. So I think there are, as it pertains to right now, there are some very good opportunities. The spread between the shelter-at-home Fab 5 FANG stocks and the other 495 stocks in the S&P is very, very wide, and that's very consistent coming out of recession. You want to own the reopening stocks, but that's not what people own because that doesn't feel comfortable. And so I think there is a great opportunity to own specific stocks right now, but there is no longer term. There's no room for a very, very broad, diversified portfolio of stocks, which really only get you the market.
So, Andrew, again, given the 495 names, other than the FANGs and some of their good friends, what are some of the sectors that you're looking at right now, given that we, even looking at the jobless claims data today, maybe troughing as it relates to the economy?
Yeah. So I don't want to get wonky, but if I take the Russell 1000 and I take the 100 cheapest stocks in the Russell 1000 based on, kind of traditional valuation metrics, PE, price to cash flow, and I look at how cheap they are versus the rest of the market versus history, they're as cheap as they were at the bottom of the recession in 2009 and the bottom of the recession in 2000. And coming out of those recessions, those value stocks did fabulously well. So I think this will be yet another repeat. So then the question becomes, well, what is in that bucket of those 100 stocks? And it's largely energy, banks, travel and leisure, and some of the consumer finance companies. And so when I look around and say, well, what has not moved? I mean, some of these travel leisure stocks, they're up a lot. They're still down tremendously. But I think the banks' financials are the big laggards. And, you've probably seen cyclicals are now outperforming defensives. Small caps are now outperforming large caps. You can't have these types of moves and not have the financials participate. So I think that's the point. But the point, I think what's most important is people say, well, these, I'll give the cruise ships as a great example, and we don't own them, but people say, well, they've already moved a lot, and so, the opportunity is behind you. Well, wait a minute. These stocks are still down 70%. So if you really think, and I don't think we do, but if you really think we're going back to where we were last year at this time, these stocks could triple from here, even though they're already up a lot.
Yeah, we like that on radio. Triple works out well. There's a triple leveraged all cash fund. Thank you for bringing it up, Andrew. I don't know if Andrew, I was in therapy yesterday because I've been in cash since the middle of March, and it's been
But Tom, one of the things I respect about what you do is I hear people say all the time, well, it's really bad out there, and that you should avoid these stocks. And the question is, but what is embedded in the stock prices already? Mm-hmm. It's easy to say things are bad, but if the stocks are down 80%, if a cruise ship goes back to 50% bookings and they're down 70%, you're going to be up 50%. So you have to analyze what is being priced into stocks currently.
But what's so important here, Andrew, and I give your shop major credit. Steve Roach inventing your modern economics, like cats herding cats, and people arguing. There's an argument, folks, at Morgan Stanley that's hugely constructive and beneficial to all, including their good clients. Andrew, the argument, now and forward into June is going to be, okay, I missed that, but the overwhelming emotion is going to be, okay, I missed it, all the easy money was made. Push against that.
Well, I mean, again, and I'll use the cruise ships as the example. If the stocks were at 50, they went to 8, and now they're at 15. Okay. Yeah, they're up.
Okay, but for a sexy guy like you, that's great. That's rock and roll. I get it. I love it. It's great.
But look at the banks. So the banks are still down 25% from their highs. So I go way out on one end. The cruise ship, that's maybe too sexy, but I think you have to be careful of the I missed it scenario. You're right. Some of these tech stocks, the reason why the S&P is within 4% of its high is because of a few main tech stocks. If you take those out, there are plenty of ideas of good companies that are still down a lot.
Yeah, Paul, the cruise ships are going to be a Dow component within 24 months.
I tell you what,
I'm trying to show you the way out of the limb, and then the financials industry.
Hey, Tom, I mean, the cruise people are a lot unto themselves. They will be cruising as soon as they can. I've talked to a bunch of them, and they're like, "I'm ready to go back as soon as they allow us." But Andrew, it's interesting here. I mean, we've had this nice, extraordinary rebound off of the bottom here. The economy seemed to be reopening here across the globe. What's the real risk for you? What keeps you up at night as you think about, the unknowns or the known unknowns and those types of things?
Well, that's a great question, because one of the things that drives me kind of fruity is we all talk about the known potential bad news, right? And if we have a re-outbreak of the virus, it won't impact the market nearly as much as it did when we didn't know the impact of the virus. So known bad news or expected bad news doesn't have nearly the negative consequences as the unknown bad news. So I think if we have a knock to the market, we have a substantial pullback this summer, it's not going to be because of retransmission or that some of the states have opened too aggressively. It's going to be something else that we're not talking about. Could it be this China issue bubbling up? Yes. I think there's going to be a lot of focus on the election. And just in general, I have come to realize that invariably something pops up geopolitically in the summer that we don't know about that knocks the market back. That seems to be consistent. So what keeps me up at night is kind of what are the things that nobody is talking about right now that suddenly could be right in front of the market at a time when we've had a very good rally in the markets, overbought.
I have a key question, just as a general statement, and then we're going to have to run here, Andrew. Are we over-diversified right now? The whole racket of our 401ks and everybody's supposed to do this, that, and the other thing. Are we too diversified?
Well, I mean, it's an ironic question because by buying an index fund, you're effectively putting 20% of your portfolio into 5 stocks. So are you over-diversified or are you under-diversified even though you think you're fully diversified? You know, I think like I said before, the spread of valuation is rather extreme. And so I think that creates a good opportunity in stock picking. But ultimately, by owning ETFs, you're really only buying the same stocks over and over and over again. So I think there's more risk than people realize.
It's been hugely valuable. Andrew Sliman, thank you so much. With Morgan Stanley Investment Management, their senior portfolio manager, just a huge value there as we all try to recalibrate. Paul, are you going to recalibrate here? I mean, I recalibrated into all cash. I was very comfortable in February.
I haven't looked at my statements for the last several months, and I'm not going to do it, Tom. I'm just going to be blindly just blissful and get through the summer, and then I'll take a peek.
It's Paul Sweeney going to the John Tucker School of Investment
That's right, of investment management.
Don't look at the statements. We recommend, folks, that you do look at those statements, have courage, and move forward. With the news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. President Donald Trump has been raging against Twitter since the social media platform slapped fact-check links on a pair of his tweets. Now he's poised to take action today that could bring lawsuits on Twitter, Facebook, and other technology giants. According to a draft of an executive order obtained by Bloomberg, it calls for the government to narrow liability protections for third-party posts. The president tweeted this morning, "This will be a big day for social media and fairness." Protests over the death of a black man in police custody broke out in Minneapolis for a second straight night, with demonstrators in a standoff with officers outside a police precinct and looting of nearby stores. One person was killed Wednesday in what police are calling a homicide. Meanwhile, Mayor Jacob Fry is calling for criminal charges against the white officer who pinned George Floyd to the ground with his knee.
That's why we need to make sure that we are seeing justice for our black community, justice for George Floyd, justice for our whole city. There have been so many people that have said, well, what do we need to do to start the healing? We can't start the healing until we stop the bleeding. And it is very real right now.
NASA and SpaceX will try again this weekend to put 2 American astronauts into orbit using an American rocket from American soil. Yesterday's launch was scrubbed with minutes to go due to weather, but the forecast isn't looking all that hot for Saturday, with only about a 40% chance of favorable weather for the launch. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. Sort of a churn to the market, equities, bonds, currencies, commodities. Well, that's oil, off a little bit. That's gold. Gold, $17.40 the ounce, up $14. Very importantly, one Dennis Gertman messaged me the other day. He's like lightening up a little bit on the gold in euro terms, because finally, on a long-term basis, maybe Europe getting their act together, and you see that in euro dollar having a good number of days in it, including out over a 110 level. All in all, a stronger euro right now, 110.36 through 112 would be a huge deal for euro. In the equity markets, 15 minutes in, a mix to the market. The Dow up 35 points, SPX up 4 points. This is Bloomberg. Good morning.
This is a Bloomberg Pursuit look at luxury. Swiss watchmakers have been bracing for the worst year in the modern history of watchmaking. Now the reality is here. Exports plunged 81%, the most in at least 2 decades, as the coronavirus pandemic led to factory closures, shuttered shops, and travel bans. Spain's Prime Minister Pedro Sanchez announced that the tourism industry will reopen for foreign visitors in July. In response, Soto Grande on the Spanish Mediterranean coast is about to discover how much golfers will dish out to get its Ryder Cup level courses, yacht slips, and polo fields safely. A private jet service offers virus tests before boarding, fewer passengers, private terminals for clients en route to their seaside villa or hotel room. In Malta, VistaJet has a similar product offer. The global aviation company is using a network of freshly sanitized jets, cars, and private VIP lounges to whisk the stir-crazy elite to Malta, where their fully stocked yachts will await. I'm Andrew O'Day, Bloomberg Radio.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Global news 24 hours a day on...
You know that feeling when you get more than you expected? Like discovering that the box of chocolates has a whole other layer underneath? Or scoring extra poppadoms with your takeaway? Or joining Tesco Mobile and finding out you get the latest phones and 99% UK network coverage? Yeah, that moment feels good, right? Tesco Mobile. Every little helps.
99% 4G population coverage indoors and outdoors across UK.
This is a message from the government. There is new guidance to help businesses and employees who cannot work from home be COVID-19 secure at work. The advice will help you conduct a risk assessment, put social distancing measures in place, improve hygiene and cleaning in the workplace, and look after the well-being of your employees. Every workplace is different. Use the guidance to make your business COVID-19 secure. Access the support you need at gov.uk/working safely. Stay alert. Control the virus. Save lives.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. The S&P 500 is headed toward its fourth straight advance. Data today showing another 2.1 million Americans filed for unemployment claims in the week ending May 23rd, while continuing claims fell for the first time during the pandemic era. Readings on durable goods orders and personal consumption beat forecasts, adding to signs the worst of the economic damage has passed. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P is up 0.2% or 4 points at 3040. The Dow Jones Industrial Average up 0.1% or 26 points at 25,573. And the Nasdaq's up 0.1% or 12 points at 9424. 10-year Treasury down 4/32, yield 0.69%. The yield on the 2-year 0.17%. NYMEX crude oil is little changed at $32.82 a barrel. COMEX gold up 0.8% or $13.80 at $17.40.80 an ounce. The euro 1.1034 against the dollar. The yen 107.76. Global stocks have recovered to levels last seen in early March, even as tensions between the U.S. and China are nearing a fever pitch. Evan Brown, head of multi-asset strategy at UBS, says the market is separating tensions over Hong Kong, technology, and capital flows from U.S.-China trade.
They see the Hong Kong issues as more regional and drawn out. And rightly or wrongly, the view from the overall market is that as long as this phase one trade deal stays in place, then it's not so much a global market issue.
And that's Evan Brown at UBS. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Paul Sweeney and Tom Keane talking a lot about the markets. And earlier in the morning, we really focused on Hong Kong. We thank our Hong Kong and Beijing news bureaus, particularly Selena Wang, Tom McKenzie, for their assistance this morning. Right now, Damien Sasso are with us. And Damien, always interesting ways to go within international markets, international credit, international economics. Except we got one problem. I look at the pandemic statistics for Brazil, and they're completely discrete and separate from any other path we've seen, including the initial shock of Wuhan in Italy. It is stunning. I mean, Peru, I get, okay, I'm going to say Peru is too small to make broad characteristics. That's not the case of Brazil. How does this pandemic affect Brazilian markets?
Exactly right, Tom. The peak in the epidemic curve in Brazil is at least another month away. I mean, just based on the data that we have today. And again, the data is coming in very slow because the testing really isn't there. And what this does is it obviously stokes risks of a debt crisis, right? I mean, it aggravates debt sustainability fears. And, from a 3,000-foot view, Brazil's economy just does not look very healthy. And now you layer in the looming risk of an impeachment for Jair Bolsonaro, and things get really, really ugly very, very quickly. And then you can justify the fact that the equity market's off nearly 40+% in U.S. dollar terms year to date.
So, Damien, just frame out that impeachment risk in Brazil. Kind of where are we now?
So, yeah, no, I mean, that's exactly right. We don't know if anyone's going to bring a case against Bolsonaro, how the case is going to be brought about. We know that the Justice Minister, Sergio Moro, has resigned, and that sort of pits him directly against Bolsonaro with the elections looming in 2022. So it's really kind of, anyone's guess as to where we go from here on the Bolsonaro impeachment, if there is even going to be one. But certainly there is a lot of chatter on the ground. You've got, El Globo and a lot of the local media news outlets really kind of, pressing the flesh on that. So, Paul, it's a real risk. And certainly you see investors backing off, and capital outflows from Brazil have been relentless this year.
Well, they're relentless, but Real's come in a little bit. It was horrifically weak. And we get a stronger Real, I'll call it, over the last couple days. When does a cagey guy like you, Damien, know to reposition for weak Real? How do you exactly do that?
Yeah, that is a great question. So let me tell you what I do.
Good one today, so go with it.
I mean, look, in my mind, Tom, it's just too early for an end to U.S. dollar exceptionalism. So let me begin with that. The U.S. dollar has benefited from a surge in safe haven capital inflows and near doubling of cross-border corporate treasury payments via SWIFT. I mean, it's not going anywhere anytime soon. And what will it take to derail U.S. dollar strength? We can sit here and debate additional Fed stimulus, how they may be bad for the dollar. We can talk about, Euro stimulus and stabilization in the Euro-U.S. dollar cross rate as being key. But, what we've seen here, if you just look at the volatility surface, I have to say it, in most of these emerging market currencies, you're seeing formations of peaks, of kurtosis in certain pockets of the market. Now, Brazil, used to have, it used to be tremendously focused when it was defending the 420 level, but since the top came off in the Real, all bets are off. And so that's the one currency cross where you really can't see consolidation taking hold yet, Tom. You can see it in the Rand. You can see it in some some of the other high-paid ATM currencies, and that is the real risk going forward for investors in the real.
Okay, Paul, we should explain here, as he was talking Greek, a volatility surface, folks, is a way to look at the guesstimates forward on the market. There's a function that only Damian Sassower and I use called OVDV, which is an act of God. Thank you, Peter Carr and Bruno DePere and the team for putting that together. And the other point is, Paul, kurtosis is what Afterthought has. She's got 58 bottles of makeup in her bathroom. And I swear in there somewhere is eau de kurtosis. It's there somewhere. Continue.
Damien, where is the International Monetary Fund in this? As we think about, I'm thinking kind of just about a Latin American. I'm thinking about the pandemic, and I'm thinking about, you mentioned the peak maybe being even a month away for Brazil. Is this something that the IMF can, I don't know, affect some type of, aid to materially help some of these economies?
I mean, absolutely, it's doing all that it can. But to be specific, the IMF is going to operate out along the periphery. It's not going to focus on the majors like Brazil. It's going to have its eyes squarely focused on a country like Argentina, which is just over the border, right? And as we all know, Argentina just plunged into technical default, and so we've got creditors kind of on the hook here, trying to figure out what comes next. There was a really interesting point, and this is really what a technical default means when you've got bonds that are issued under New York state law. Every day that Argentina fails to pay on the $500 million in overdue interest, there's a 9% hit that the state of New York, that Albany, that Governor Cuomo applies to that. It's and this happened last time during the fall. It actually added up to $2.1 billion in additional interest payments that Argentina needed to make just because its bonds were issued in the state of New York, right, under New York law. So these are the things the IMF are really squarely focused on, because those are real dollars out the door, and there's a timing issue that also comes into play there, Paul.
I loved the bar in Buenos Aires, Kurtosis. That was such a good bar when I visited there. Damien, thank you so much for joining us today. Always brilliant there, particularly and with great seriousness on Brazil. Paul, I look at all, Zoe Schneeweiss and the team at Bloomberg out with a great set of graphics today. But what all the newspapers are doing in that, and the FT with John Murdoch. The glide paths of Brazil are truly frightening. They're not like New York. They're not like London.
No, it's and it's just extraordinary. And this is something that unfortunately we kind of knew was coming here, Tom. When you think about some of the healthcare facilities and infrastructure in some of these emerging markets, you just knew that they were going to get hit especially hard. It was just a question of when here. So we're starting, as Damien suggested, really starting to see some grim numbers there.
Dow up 60 points at Bloomberg Surveillance. We do the math. There's 10,000 hours on HBO Max. If I watch 6 hours a day, I can watch for 4.5 hours and never repeat the same episode of Game of Thrones. This is Bloomberg. Good morning.
Asset managers who seized... The force is strong in my family. My father has it. I have it. You have that power too.
For the first time ever, stream the complete Skywalker saga, all in one place. 9 incredible films, one epic story, only on Disney+.
The Force will be with you, always.
The Skywalker Saga on Disney+, now streaming. 18+ subscription required. T's and C's apply.
I've used my ample time indoors to hunt down my odd socks. I found one down the sofa, one in the bread bin, and one in a serious relationship with my cat. But there are better ways to spend your time. That's why Money Supermarket is helping you find cheaper insurance, better interest rates, and easier ways to manage your bills. You can find many more small steps towards money car at Money Supermarket.
The NHL is always on the ice with these awesome hockey podcasts on TuneIn. Get your goal with the Spittin' Chicklets podcast.
Brian Yandel, Keith Yandel, thanks for coming on. What's going on?
Nothing much. Glad to be here. You guys got some nice digs here.
We heard you took Southwest 2-stop flight to get out here.
Yeah, well, just...
Carve up the ice with NHL at the rink.
The other day I wrote a story. Artemi Panarin, Semyon Varlamov, Sergei Bobrovsky, they all helped arrange for the purchase of N95 masks to benefit hospitals in their respective markets. This is another one of those positive stories you're seeing.
Or create your own power play with Locked On NHL.
All these teams invested future assets to take a run at the Stanley Cup right now.
like all of those teams would have a real serious gripe, like trading these multiple first-round picks to make a run at a cup. You're right.
Discover these and more NHL podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Big Steve edition.
Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
Because now on the show, everybody's kind of the same size, but as soon as I saw you, it's been...
For these and more, search sports and scroll down to the world of wrestling. Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
How do you kind of view the volatility in the marketplace here?
What are you looking at to give you some sort of compass through this period?
Companies across the board, across industries, really trying to shore up their balance sheets.
A lot of economists are just throwing up their hands and saying, we don't know.
Breaking market news and insight from Bloomberg experts.
There's only so much that you can speed up vaccine development. Because of all the dislocations, there's always relative value trades that you could be doing.
This could be a U-shaped recession rather than a V-shaped recession.
It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City and points beyond to our worldwide audience. Coming up, we're going to have Citigroup CEO Mike Corbett. He's going to discuss the company potentially reopening in New York City. That's an exclusive interview with Bloomberg's Eric Schatzker, plus Phil Orlando, Chief Equity Market Strategist at Federated Hermes. He's going to give us his outlook for the markets. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg, what do you have?
Well, Paul, stocks have been struggling to advance amid a batch of economic data that show the deep damage to the American economy last month was perhaps less severe than anticipated. Oil's holding below $33 per barrel. Chinese lawmakers passed sweeping national security legislation targeting Hong Kong. The move risks fueling more demonstrations and stokes concern essential freedoms will be lost. Jonathan Finby at TS Lombard spoke to Bloomberg Surveillance about just what that means.
The decision to put national security legislation through the National People's Congress, which was approved today in Beijing, that shows that Beijing is going to take political control, I think, in Hong Kong, delegating some activity to the local government, but definitely the national interest now predominates.
We check the markets every 15 minutes. The S&P is up 0.1%, up 3. The Dow's up 0.2%, up 45, and the Nasdaq is down 0.1%, down 10. The 10-year is down 3/32 with a yield of 0.69%. West Texas Intermediate crude oil is down 0.1% at $32.77 a barrel, with COMEX gold up 0.5% at $17.3510 per ounce. The dollar yen stands at 107.76. The euro's $1.10.33, and the British pound $1.22.81. That's a Bloomberg Business Flash. Bloomberg Markets is underway with special programming. Lisa Abramowitz and Paul Sweeney.
Thank you so much, Greg Jarrett. There is a big question among corporate executives right now. How do you get your workers back to the office? This is very present in the minds of executives of big banks in particular, especially in large metropolitan regions. Citigroup CEO Mike Corbat sat down and spoke about this challenge exclusively with Bloomberg's Eric Schatzker from Wyoming, where he was hiding out from the outbreak. Let's take a listen.
This pandemic has imposed a unique set of challenges on the economy and on companies like Citigroup. Mike, as you look into the future, what would you say is the biggest challenge you face now?
I would without a doubt say it's the uncertainty, right? As we look at this pandemic, and again, this is a health crisis that has manifested itself into an economic crisis, is what we don't know. There's still so much unknown about the health challenges and therefore how this will play forward and what the ensuing economic challenges will be.
Given what Citigroup went through in the financial crisis, Mike, it's hard not to make comparisons. What lessons are you drawing from that experience and applying now?
Well, I think one is that we've got to recognize that this is not at its core an economic crisis. This is a health crisis. And I think the great news is that not only Citi, but much of the financial system has gone into this from a position of strength. From our place, it's capital, it's liquidity, it's business model, all of those things. And the investments that we've made in technology and infrastructure so far have served us really well. And again, we're here in a different role this time, as opposed to being at the center of the challenges. I think we're playing a very constructive role, not just in terms of our normal role in terms of being a bank, but when you think about the extraordinary actions that not just the U.S. Federal Reserve or U.S. Treasury have done, but central banks and finance ministries around the world, that we've played a very important role in terms of that transmission mechanism from unprecedented monetary and fiscal actions and getting those and bringing those to life for the real economy. So I hope and believe that we've played a very constructive role thus far in this challenge.
You had a front row seat the last time around, Mike. Are there mistakes that Citigroup made during the financial crisis that as a result you're able to avoid this time?
Well, I think one is if you look at our company, our bank today, we describe ourselves as a simpler, stronger institution today. And that when you look at the things we do, I think we've very much focused our business around two key, our institutional and our consumer business. And again, we've simplified what we do. So we go into this, I think, from a position of strength of not only capital liquidity, I think, but of sanctity of business model and the commitments that we have to our customers and clients.
6 weeks ago, about 6 weeks ago, I would say, when Citi reported first quarter earnings, the mood, as you'll recall, was dark. Right? More than 500 New Yorkers were dying every day. Most of the country was locked down. How much better do things look now?
Well, again, I think the actions, the healthcare actions or the health actions taken around the globe in terms of distancing, in terms of the protocols, in terms of shutdowns have, in my opinion, clearly bent the curve and had real tangible benefits. I think the question now is that as we start to come out of this, and again, as you think about the phases, Eric, that we're moving from what I would describe as containment, moving back towards stabilization. And as we come out of containment into stabilization, to make sure, in fact, that we don't see, as we've seen in some places, that spike back up. And so as we move through that, I think there's some optimism in terms of where we are, in terms of the trajectory of cases and spreading. I think there's more optimism since that time frame that you referenced in terms of advancement, in terms of getting an antivirus or getting a vaccination, which I think is critical as we move to the third stage of normalization that's there. And so I think there's optimization. There's optimism there, but I think as part of that needs to be cautious optimism because, again, there's still so much we don't know.
What about you personally? where do you sit on that spectrum of caution to optimism, or I guess if it goes all the way from pessimism to optimism? I note, perhaps a reluctance, Mike, to sort of fully embrace this idea that we're going to be back in business and that everything's going to be fine. You talked a few weeks ago about discounting a V-shaped recovery and being unsure of whether it was going to be U-shaped, W-shaped, L-shaped. What are you thinking right now?
Well, again, for me, it's about the data. It's not about a date, right? It's not about setting a date. And I tell our employees all the time, you're not going to wake up one morning or go to bed one evening with a blast email saying tomorrow's the day, come back. That we're taking a very granular approach to this as a global company. Again, as we look at this pandemic, it's uneven in its nature in every sense. Right? It didn't start at the same time. It hasn't spread at the same rate. We've seen varied healthcare responses. We've seen varied economic and policy responses to it. And therefore, not just in the U.S., but around the world, there's going to be a varied pace of recovery from this. And I think as that, from Citi's perspective, we're going to take a very granular approach around the data and what that data tells us. And again, I think that stealing a line that my wife often uses, and that is that while we're all in the same storm, we're certainly not in the same boat. And I think we've got to be very mindful of that.
Clearly, Mike, one of the hardest decisions a CEO has to make is when to bring people back to work. Are they going back to their old desks? Are they going to some new space in the suburbs? Will employees be expected to travel, or is, Zoom the next business class ticket? And if a big client shows up at the front door with a fever, do you welcome him in or do you turn him away? Tell me how you're thinking about those kinds of issues.
So I think one is that our business model, Eric, has given us some real advantages, and that is that, clearly we've been in Asia a long time, and our colleagues there, I think, gave us great insight, right? As we saw and we knew that it was likely COVID would be coming west, we had the ability to have the learnings on the ground of what was happening in Asia, what was working and what wasn't. And if you go back and look at the record, I think we were pretty early movers in terms of some of the decisions we made. Overarching, since then, it's all been about the health and safety of our people in terms of making sure that we could do everything within our power to ensure that. And so again, as we start to think about returning people to the office, it's going to be driven by data, as I said. It's likely to be slow. It's likely to be granular, so it will be site by site. In fact, within those sites, it'll be job by job. And again, I think the great news is that the investments that we've made in technology along the way and the efficacy of which remote working has worked for us. I think it's nice to have that flexibility. And again, if you look at the things that we've done remotely, it's been truly extraordinary. In terms of lending, in terms of holding our annual shareholders meeting, of closing our books to report earnings in 9 days, of the things that we've been able to do for our customers and clients, and by the way, the things that we've been able to do for the communities that we serve in terms of giving back.
So give me your best guess. I know it's data-driven. You've been very clear about that. But give me your best guess, Mike. When will you start putting people back into your global headquarters in downtown Manhattan?
Well, I saw that and was on a call that Mayor de Blasio talked about June 15 as a date. We will look. My sense right now around the data is it's likely sometime in late June that we'll start returning some people, and it will be a limited number of people back to the office. And again, in there, it's all about, can we bring these people in and keep them safe? And I think the protocols that we've been working on, and again, it's not simply about a desk or a turret or an office. It's about coming through the turnstile. It's about the cafeteria. It's about the elevators. It's about all of those things that are there that you've got to make sure are safe. And then the bigger challenges actually, I don't think, are in phase one. I think it's as you continue to bring more people back and densify, how do you actually scale those protocols to be able to keep that safety.
Is putting traders back on the trading floor a priority?
Listen, there's been a lot of talk in terms of companies saying that people never need to or will return to work. I'm very comfortable saying at Citi that's not who we are. We are very happy to continue to imagine and reimagine as we go forward the ways we come to work. But at our core, we are a client-facing, client-driven business that in many ways is an apprenticeship business, right? And that the craft, the trade is passed down, and that human interaction is critical. And again, I'm a person who I believe we've got to see how this ages. A lot of people talk about, and by the way, at Citi it's been terrific in terms of remote productivity, but we don't know actually over time what that looks and feels like. And in our business model, I think we're very fortunate of being a 200-plus-year-old company and having a large number of really well-established, deep relationships. But over time, I don't know how those things age. And so, again, we'll continue to kind of think about those things. And again, health and safety being number one. But it's my ambition and my goal to get our people back into the office safely when we can.
That was Citigroup CEO Michael Corbat talking with our own Eric Schatzker, talking about kind of getting back to business, somewhat back to normal. Lisa talking about maybe getting some of their people in New York back into the office late June, maybe into July, but really relying on the data to kind of drive how the bank tries to get back to some semblance of normal in terms of workflow and working environment. Really interesting conversation with Mike Corbat.
Yeah, actually, Bloomberg News had a follow-up call with Citigroup's Corbat and talked about how he expects in New York City in particular, the likelihood is August, Citigroup will have perhaps 5% of its staff back in its headquarters in Manhattan's Tribeca neighborhood. A slow process. Interesting, though, we don't know the effect of longer-term working from home on relationships, one of the key issues right now for Wall Street. Right now, let's head down to our 99.1 studios in Washington, D.C. Nathan Hager there with world and national headlines. Nathan.
Lisa, President Trump has just offered his first reaction to the U.S. crossing the 100,000 mark in coronavirus deaths. He went on Twitter, calling it a very sad milestone and offering, quote, heartfelt sympathy and love to the families and friends of those who've passed. Earlier, the president tweeted that this will be a big day for social media and fairness. He is expected to sign an executive order aimed at Twitter and other tech giants. A draft obtained by Bloomberg shows it would narrow the liability protections those companies enjoy from third-party posts. This move comes after Twitter posted fact-check links on the president's tweets for the first time this week. China is going ahead with a sweeping bid to take control of Hong Kong. Lawmakers in Beijing have overwhelmingly approved plans to write a national security law for the city. Pro-democracy demonstrators fear it could mean the end of what sets the former British colony apart from the rest of China. Joshua Wong is a leader of the pro-democracy opposition.
With such evil law suggested by Beijing to impose in Hong Kong, we really encourage and enhance more global community to keep an eye on Hong Kong to oppose the national security law.
How could President Trump respond? He does have several options, including new sanctions or ending Hong Kong's special trading status. House Democrats have just confirmed that they're scrapping a bill that would restore federal surveillance authorities used to track terror suspects and spies. That's after President Trump threatened a veto. In a statement, House Majority Leader Steny Hoyer said that 2/3 of Republicans who voted for the bill in March have indicated they will vote against it now. He says he's told they're doing so at the president's direction. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. Now let's get a check of markets from Greg Jarrett with the Bloomberg Business Flash. Greg.
Nathan, the S&P is edging back into the green. It had been little change. Data indicated another 2.1 million Americans filed for unemployment claims in the week ended May 23rd, while continuing claims fell for the first time during the pandemic era. Now, we check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P is up 0.3%, up 9. The Dow's up 0.25%, up 61. And the NASDAQ is up 0.3%, up 29. The 10-year's down 2/30 seconds with a yield of 0.69%. West Texas Intermediate crude oil is down 0.3% at $32.71 a barrel, with COMEX gold up now 0.6% at $17.3670 an ounce. The dollar yen at 107.72. The euro $1.10.48, and the British pound $1.22.98. And how about some more data? An index of contract signings for purchases of previously owned U.S. homes slumped to a record low in April as coronavirus lockdowns thwarted prospective buyers. Pending home sales decreased 21.8% to a level of 69. That's the lowest in records back to 2001. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We got some data, as Greg was mentioning today, showing a devastating picture for unemployment. Some green shoots there, if you want to take it for the optimistic side of things, but still highlighting an unemployment rate that's likely to climb to 20% in May. The question, why are equities rallying? Joining us now, Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes, with $89 billion in equity investments under management. Phil, what's your take here, especially given the fact that we've seen this ongoing rotation, perhaps not today, but leading up to today, going into the cyclical stocks? How much traction does this rally have?
So your lead-in on the claims data is really a beacon of light on this whole issue. The pessimist, the glass half full person would say, well, we've got almost 41 million initial claims that have been filed over the last couple of months. That's absolutely horrific. And then the optimist, someone like me, says, yeah, but the claims have fallen from 6.9 million on March 28th to 2.1 million, which was this morning's number. They've fallen by 2/3 and 13% on a week-over-week basis. So the trajectory, I think, is what the equity market is looking at. So separate and apart from claims, you mentioned green shoots at the very beginning. Oil prices, have gone from $10 to $35. Confidence, Michigan Conference Board, the Small Business Optimism Index, better than expected. Several of the Fed indices, Empire, Philly Fed, Dallas, Richmond, better than expected. What I'm saying is the equity market as a forward-looking discounting mechanism is not looking at the horrific absolute nature of what the data is presenting today. They're saying, okay, the infections, the mortalities peaked from a trajectory standpoint in early April. They're getting better. We're starting to slowly reopen the economy. So as we look out into the second half of this year, into the end of this year, the economy's open. We're out of the recession. We're starting to grow again. And that's what the market, in my view, is attempting to price in here.
So, Phil, a lot of the medical experts have warned that we should be expecting a second wave of infections, perhaps in the fall and winter time. How do you think the markets in general will deal with that if that does, in fact, occur?
Well, and that's why the progress that we've made from the healthcare community here over the last couple of months is so critically important. So you've got one drug company, Gilead, which has had their antiviral drug, remdesivir, approved by the FDA. You've got 100 different companies working on vaccines. You've got 8 of them that are actually making some solid progress, and you've got 3 of them that appear to be a step ahead of everyone else, sort of in phase 1 to phase 2 clinicals right now. Moderna, Oxford University, and Novavax. The idea here is that given the pace that a handful of companies are making, and the pressure, I think, that the FDA self-imposed feels to try to get something out there, we could have a vaccine by the end of this year. And so if you've got an antiviral drug and one or more vaccines, that potentially is going to blunt this dreaded second wave that we're trying to avoid. Now, the risk is that these antivirals crap out, that we don't get a medical response, and that we do get the second wave. That's going to have a deleterious impact on the reopening of the economy, economic growth, and I would suggest stock market performance as well. What the market's pricing in now, I think, is the fact that we are making medical progress on this drug development, and the thinking is something is gonna shake free by Thanksgiving.
All right. So how are you positioning?
We have maintained a 3% equity overweight with a focus on domestic large cap growth and domestic small cap Those areas have done pretty well here, led by healthcare and technology. One area that we've liked that hasn't participated up until now has been financials. But just in the last week or so, we're starting to get sort of a catch-up trade that you folks have been talking about. You know, some of the more economically sensitive categories like financials, industrials, consumer discretionary, energy, etc. So we've been sticking with the growth and the quality, but we're watching this catch-up trade pretty closely.
What would it take for you to change that view, especially given the fact that the vaccine scenario that people are expecting and that Anthony Fauci sort of raised the specter of yesterday, that it could be approved, something could be approved by the end of this year, has been called into the question by the likes of the Merck CEO, who came out and said, this seems really ambitious to us.
Well, and I think that's exactly the point. If we do not make the medical progress that we think we're going to make on the vaccine front, and as a result end up with this disastrous second wave, which forces us to shut the economy down again and extend the recession, which we think is contained to the first half through the back half of the year, that's not in our expectations. We think because of the reopening that's going on, we're going to have positive third quarter growth over second quarter, positive corporate earnings in the third quarter versus the second quarter. That's our base case. So if those things don't happen, if the economy gets shut down because of this second wave, because we don't make the progress on the drug development that we think we're making, then that's going to cause us to go back to the drawing board.
Phil, just real quickly, what do you make of China here? That looks like the tensions really are kind of starting to ramp up here.
Well, I'm not a China expert, but my best guess is that perhaps President Xi is trying to direct global focus on the role that the Chinese had with the coronavirus. It now appears that they knew about this as far back as maybe October and November of last year and kept it quiet until the end of January. That's obviously unsettling if that's true. And so perhaps to take the focus off that, you shift over to this Hong Kong situation, which is equally troubling. And as a result, we're watching Hong Kong right now rather than, assigning blame to who knew what when.
Hey, Phil, thanks so much for joining us. We always love having you on, getting your perspective. Phil Orlando, Chief Equity Market Strategist and Head of Client Portfolio Management at Federated Hermes. They have about $89 billion in equities under management. Joining us on the phone. Phil, thanks so much for joining us. So, Lisa, it's interesting here. Phil continues to keep, I think, what we've long seen from Phil is kind of a positive bias to the market here. And he's certainly been right coming off that bottom, just this great rally coming off of the bottom. And I think the market's starting to discount, a reopening of economies and, of course, accommodative central banks around the world pushing this market higher. This is Bloomberg.
This is a Bloomberg Money Minute. Data showed another 2.1 million Americans filed for unemployment claims last week, while continuing claims fell for the first time during the pandemic era. That's a sign that people are returning to work. That's helping stocks edge higher. President Trump plans to escalate his fight with Twitter. He's taken exception to the company's new fact-checking feature. Bloomberg has learned the president will issue an executive order that could lead to a flurry of lawsuits against Twitter, Facebook, and other tech giants. It would narrow the liability protections that they have for third-party posts. American Airlines plans to cut 30% of its management and support staff as it tries to weather the dramatic downturn brought on by the pandemic. And Disney is preparing once again to welcome visitors to its Florida theme park starting in July. That's weeks after Universal Studios and SeaWorld plan to reopen. Disney said it wants more time to build customer trust. Courtney Donahoe, Bloomberg Radio.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
At Bloomberg, we know a lot of financial experts.
He's a former president of the European Central Bank.
Your Global Financial Warriors is a classic textbook.
A lot of political experts.
If you were advising the President of the United States, what's the thing that he's not doing that he should do?
And lucky for you, we know a lot of science experts, too.
You talked about those reagents which are necessary for the testing.
It's also the behavioral psychological approach.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. This Independence Day.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
At Moonpig, we've got making people happy down to a science. How? With flowers. Research shows that whether small blossoms or giant blooms, roses or peonies, receiving bouquets of any formation causes our bodies to produce endorphins, or the happy chemical. Thank you, Professor. And you too can harness the power of flowers with Moonpig. It's easy. Send a beautiful hand-tied bouquet of happiness straight from our app with just a couple of taps. Heartfelt can happen anywhere with Moonpig.com.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you fully informed on the NBA? On the NBA Hangtime podcast, veteran sports writers Sekou Smith and John Schumann analyze the latest NBA news, storylines, and discussions with guests from around the basketball universe.
Isaiah Thomas joined us here on the Hangtime podcast. Isaiah, good morning.
Everybody's doing well. As you know, my daughter tested positive.
Search NBA Hangtime on TuneIn to listen.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
10, race to the 5, touchdown! Search classic game replays to listen for free.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, tensions rising between the U.S. and China. Hong Kong in focus. Just a question of what the U.S. can do about China's incursion into that region's autonomy. Plus a conversation with Cass Sunstein, Harvard law professor, about President Trump and his tiff with Twitter. Right now, though, let's head over to Greg Jarrett for a Bloomberg Business Flash. Greg.
Lisa, the S&P climbs even as data show another 2.1 million Americans filed for unemployment claims in the week ended May 23rd, while continuing claims fell for the first time during the pandemic era. Global stocks have recovered to levels last seen in early March, even as tensions between the U.S. and China are nearing a fever pitch. Evan Brown, head of multi-asset strategy at UBS, says the market is separating tensions over Hong Kong technology and the capital flows from the U.S.-China trade issue.
They see the Hong Kong issues as more regional and drawn out. And rightly or wrongly, the view from the overall market is that as long as this phase one trade deal stays in place, then it's not so much a global market issue.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P is up 0.3%, up 8. Dow's up 0.2%, up 57, and the Nasdaq's up 0.3%, up 30. The 10-year is down 2/32, the yield 0.69%. West Texas Intermediate crude is down 0.6% at $32.61 a barrel. COMEX gold is up 0.5% at $17.3660 an ounce. The dollar yen 107.71, the euro $1.10.54, and the British pound $1.22.98. That's your Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Tensions have been rising between the U.S. and China, Hong Kong at the very forefront of that, with China passing rules to impose some new security rules on Hong Kong, basically being viewed by the U.S. as stripping that region of its autonomy. Here with us now, Christopher Balding, Associate Professor at Fulbright University in Vietnam and a Bloomberg opinion columnist. Chris, I want to start with Hong Kong and its economic position relative to China. How much of an economic hit would it be to Beijing if the United States were to revoke that special trading status with Hong Kong?
In some ways, it wouldn't be that big of an issue, even though they're thinking of raising the tariffs to match not the Hong Kong level, but the China level. There's not a whole lot of manufacturing that takes place in Hong Kong anymore. Basically, a service economy. It's a big shipping port. Lots of trade goes through Hong Kong before arriving in China, which changes the designation of products. But overall, the real economic impact is not where the primary pain would be felt. There's some legislation right now that would basically begin to crimp U.S. dollar access in different ways to Hong Kong and Chinese firms and entities seeking U.S. dollar funding. That is where the real pain would come in. And especially if there was a move, for instance, by firms to escape PRC legal status and move to places like Singapore, where there would be much greater confidence in contract enforcement and things like that. So that is where the real pain would be felt, not in the direct economic impact.
Chris, give us a sense of why China is asserting its authority now. Is there anything specific about this timing here?
I think the best theory on that specifically is that they realized that to, let's say, try and assert control over Hong Kong more strongly, the way that they were doing last year simply wasn't working. So this is essentially the legal version of rolling in a tank into Hong Kong. And I think at this point, I think a lot of Hong Kongers, I think that the mood seems to be a little bit more resigned to their fate, that they're not going to be able to stop this. And I think one of the things you're hearing from different people I know is basically it's time to move on. It's time to consider leaving Hong Kong.
And I've heard that, too, from a number of companies that are looking at Singapore, like you said, and trying to make plans sooner rather than later. I want to go back to something that you were saying about the dollar funding pressures that could be foisted upon Beijing due to some of the U.S. moves against Hong Kong. Can you talk a little bit more about that? Because I do not think that that's being priced into the market or even talked about much among analysts.
Sure. So there's a couple of specific issues. So, for instance, some of the legislation that is currently in the House, it's already passed the Senate. It specifically targets companies or individuals in Hong Kong and the banks that deal with them and providing dollar access and other financial services to them. So depending on how broadly a lawyer or a regulator wanted to interpret statutes like that, one could quite plausibly assume that this would include some of the largest Chinese companies and some of the largest Chinese banks would be wrapped up in this. And so this would prevent U.S. banks and other banks from potentially servicing those clients. One of the areas where you've seen this a lot, you saw this a lot before Corona, was, and in 2019, is there was a lot of U.S. dollar raising by Chinese banks that need to raise capital. We saw just recently that the bank capital in Chinese banks has declined to a long-term low. It's now just above 9% and is continuing to decline. That's a real problem. They need large amounts of funding, and a lot of that is coming via secondary offerings in various convertibles in Hong Kong. So if they cannot raise U.S. dollar funding because of sanctions or new legislation, that could cause real problems.
So, Chris, just about 30 seconds. Give us a sense of, is there any recourse for the people of Hong Kong here, or is this kind of a fait accompli?
To be quite frank, unfortunately, there does not seem to be a lot of recourse with regards to China. China seems to have made the decision that this is what they're going to do in Hong Kong. And barring, significant violence, at which point the PRC seems focused on ramping up and bringing in significant police or potential military support, there does not seem to be a lot that the Hong Kong people or Hong Kong government can do.
Chris, thanks so much for joining us. Christopher Balding, Associate Professor at the Fulbright University of Vietnam, also a Bloomberg opinion columnist, talking about the developments in Hong Kong as China asserting ever more control over Hong Kong. It seems to be kind of a trend here, and it doesn't seem to be, according to Professor Balding, much that Hong Kong can do here. So, but certainly ratcheting up the tensions between the U.S. and China. So we'll have to see how this plays out. But again, the China-U.S. trade war is still out there, and still for something for investors to consider. But also, the overall trade very difficult between the two countries. Let's head down to Washington, D.C. right now for world and national headlines with Nathan Hager. Nathan, what do you have for us?
Well, Paul, I'll start with a quote from President Trump, a very sad milestone. It's how he's describing the coronavirus death toll in the U.S. crossing 100,000. President commented on it for the first time on Twitter, offering sympathy to the families and friends of those lost. The president's Democratic opponent, Joe Biden, gave his first reaction last night.
There are moments in our history so grim, so heart-rending, that they're forever fixed in each of our hearts, a shared grief. Today is one of those moments.
This morning, the White House has decided not to issue the economic forecast it usually puts out in the summer, updating projections from its budget proposal in February. Sources tell Bloomberg the unprecedented nature of the pandemic makes a forecast impossible. The Justice Department says it is making its investigation into the death of George Floyd a top priority. Floyd is the black man who was seen in a widely circulated video gasping for breath as a white police officer knelt on his neck until he passed out. Minneapolis Mayor Jacob Fry is calling for criminal charges.
Why is the officer that killed George Floyd not in jail right now? And I can't answer that question.
The officer and 3 others involved have been fired. Protesters were out in Minneapolis again last night. At least one person was shot to death during the demonstrations. Attorney General William Barr has tapped a federal prosecutor to look into the Obama administration's use of unmasking during the 2016 election. U.S. Attorney John Bash's appointment was announced last night. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Oculomotor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma.
The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
COVID-19. Can the world...
With the shift to remote working, video conferencing has become the new normal to keep your business running. But is it reliable and secure? Cisco WebEx is committed to the highest security standards and already trusted by both small businesses and many of the world's largest organizations. Call, message, and meet securely with Cisco WebEx. Sign up at cisco.uk/work-from-home. When secure remote work is critical, WebEx is essential.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There's going to be 2 champions on the field tomorrow night. There's going to be 1 team hold up the trophy.
Race to the 5! Touchdown! Search classic game replays to listen for free.
Hey, y'all, we're taking the Marty Party to a whole new level with the Marty Smith's America podcast with Gerald McCoy.
I truly believe that Carolina made a mistake letting Cam go. This is not a personal shot at Teddy Bridgewater. This could have been Andy Dalton. This could have been whoever they brought in. Cam has so much left. Somebody's really getting the great one, man. And I don't think people really understand what they're getting.
Search Marty Smith America to listen.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn. Get your MLB fix with these great podcasts on TuneIn. Fill your 7th inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting 9 podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
And as we
race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks are in the green amid a batch of economic data that show the deep damage to the American economy last month was possibly less severe than anticipated. Treasuries are down. We look at the numbers every 15 minutes throughout the trading day. S&P 500 is accelerating. It's up 0.5%, up 16. The Dow's up 0.4%, up 104. And the NASDAQ is up 0.6%, up 57. The 10-year is down 2/32 with a yield of 0.69%. West Texas Intermediate crude is now little changed at $32.80 a barrel, while COMEX gold's up 0.7% at $17.3840 an ounce. The dollar yen, 107.67. The euro, $1.10.53, and the British pound, $1.23.14. Toll Brothers shares surged a bit after the company posted profit that beat estimates and said deposits on new homes were up in recent weeks. Potential sign of optimism for the luxury housing market right now. The stock is down 1.1%. That is a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets. And Paul Sweeney on Bloomberg Radio.
Well, over the past several days, President Donald Trump has been raging against Twitter since a social media platform that helped vault him to the presidency slapped a fact-check links on a pair of his tweets. To get a sense of what this really means for Twitter and free speech, we welcome Cass Sunstein. Cass is a Bloomberg opinion columnist, a Harvard law professor, and the author of a new book entitled Too Much Information, which will be out this July from MIT Press. Professor, thanks so much for joining us here. Give us your thoughts here of what's really happening here between Twitter and President Trump. What's really at the foundation of what's going on here?
The foundation has nothing to do with President Trump. The foundation is that Twitter adopted a policy after, I'm sure, a lot of internal discussions that isn't about Vice President Biden or President Trump or about a famous scientist. It just says that if there are misleading claims on its platform, it's going to respond generally in a very gentle way by having a label that said, get the facts here with a link. So if you post on Twitter saying, the more cigarettes, the less cancer, everyone should smoke to ensure that they live forever, Twitter's policy would say, get the facts here. And that's been applied now to the president, and it's just an application of a policy they adopted.
Well, Professor Sunstein, I'm wondering, though, consistency has been an issue for Twitter in terms of other tweets that President Trump and others have put out there that perhaps they haven't fact-checked as much, and some people saying, why now? Why this one? Can you give us a sense of the legal standard in following some sort of understandable protocol in when they interfere and when they don't, and how that might come to hurt Twitter, actually, going forward?
Okay, well, the fundamental background fact is that Twitter isn't governed by the U.S. Constitution. So if Twitter said we're only going to have Republicans on our platform, or only Democrats, or only things that take a certain stand on immigration, that would raise no constitutional question. It appears that there aren't statutory restrictions either, though that's not 100% clear, meaning Twitter has a lot of room as the law now stands to run its platform as it sees fit. So the legal question isn't very lively right now. It might become livelier eventually, but basically that's not the main concern. Twitter's policy of putting on labels and warnings is relatively new. Most of President Trump's tweets don't have factual errors. President Trump's critics complain of those that do, but the majority don't, and that's true of anyone who's regularly on Twitter, I hope. That's probably an overstatement. Most people on Twitter don't mostly have factual errors. So given the volume of factual errors on Twitter, just like given the volume of people who are shoplifters, the enforcement authorities aren't going to be able to respond 100% of the time. Here, the correction, what's called the label, that's more precise, involved a claim about voter fraud being rampant where you have mail-in ballots, and evidently that's misleading. Twitter didn't even say, by the way, it was misleading. It said it's potentially misleading, and Twitter didn't say it was false. That would have been fair to say. It said it's potentially misleading, and therefore we'll put our response in, and that's completely fair to do.
Professor, there's also another legal question here, and that is freedom of speech, and it's one that's been invoked by President Trump, and it's also been invoked by others who say freedom of press is part of the issue, too, with respect to Twitter. What freedom should we be thinking of when we frame this issue legally?
Well, if, let's say, the Wall Street Journal decided to have an editorial policy of a certain kind, the First Amendment doesn't play in at all. If Facebook decides that its news feed is going to go in a certain direction, there's no constitutional issue, and there's probably no legal issue. That is that the Constitution, is really important to see, applies only to government, and that's part of freedom, by the way. If you want to say or do certain things, the Constitution doesn't apply to you. The one exception, which is an interesting one, is if you enslave someone. Then the Constitution kicks in. As a cultural matter, Twitter, though it's relatively new, its business model and its success, really, and its legitimacy depend on being a kind of free-for-all. And that's not a legal idea. It's just a business idea. Like, Reddit or YouTube, they have a lot of stuff on them. And that's probably very good. And certainly in the case of YouTube and Twitter, it's part of what makes them as, positive as they often, not always, as positive as they often are. And that means that Twitter should, if it's to provide the public service it's providing, tread very lightly on freedom of speech. And what we had was so light, it's kind of astounding to see the flare-up on the part of the White House. Facebook, Twitter didn't even say it was false. It just said, get the facts on. And seeing it, you could think the facts are going to be exactly what the president said.
So, President, it's interesting, Professor, when we think about President Trump, one of the questions is simply as it relates to some of these social media platforms, Facebook and Twitter. Are these Facebooks and Twitters of the world, are they media companies, or are they merely platforms for people to put their own thoughts on?
They are platforms. That's technically what they are. I do think President Trump is correct in exploring exactly what they're doing and what kind of legal authorizations they should have to do what they're doing. So if a newspaper has certain kinds of material on it, let's say libel or child abuse, they can be subject potentially to a lawsuit. There's a law called Section 230 that exempts the social media providers from liability for things for which newspapers and magazines and television stations would be liable, at least to ponder the reach of Section 230, which is back in 1996. I think that is fair.
So ultimately, what's your opinion on of Twitter's kind of solution here, if you will, to President Trump and others?
Well, I think Twitter's general approach here is extremely reasonable and very soft, which is to say that, they're going to say get the facts if they detect something that's misleading. And the place they point people to should be, fair enough, and it looks like it's fair enough here. I wasn't misleading, but that's part of public discussion. It shouldn't be part of threats.
Professor Cass Sunstein. A pleasure having you on. Thank you so much for being with us. Professor Sunstein is of Harvard Law School, also a Bloomberg opinion columnist and author of the new book, Too Much Information, which will be out this July from MIT Press. Coming up, we're going to be talking more about the markets continuing to rally despite some of the bleak economic data that we have been getting. Also, look at that jobs information that we got this morning. How are we getting potentially some green shoots amid the incredible pain? Right now, this is Bloomberg.
Business is like a puzzle.
Get your cook on with Asda, with rollbacks on our 227-gram Butcher's Selection sirloin steak, was £3.55, now only £2.85. And our 255-gram Butcher's Selection rump steak was £3.55, now just £2.70.